All right, we are live. Hope everyone had a good, productive lunch. So we were in the middle of public testimony on agenda item number 5, the Wyoming Stable Token. Mr. Kaufman, I think you wanted to take a moment to get some animated testimony and perhaps take a moment to make some clarifying remarks.
Well, yeah, thank you, Mr. Chairman. I'm not quite sure what I can say. One of the disadvantages of being an attorney is most everything I'm engaged in is protected by attorney-client privilege. So unfortunately, I can't comment on ongoing matters. I will just say for the committee's benefit, I'm not even really sure what the allegations regarding the conflict of interest were exactly. I'm not on the Stable Token Commission, have nothing to do with the Stable Token Commission other than being an observer, and on this committee. So it's no secret that myself and my firm have participated tremendously, as much as we can, in supporting the digital asset ecosystem, including Bitcoin miners. I'm a big believer in the economic diversification opportunities that this industry brings to Wyoming. So, outside of that and the fact that myself and my firm have represented various parties over the years, again, I wish I could comment more specifically, on anything, but frankly, I didn't hear anything, Mr. Chairman, that warranted a response. So I think that's all I'll say on that.
Thank you, Mr. Kaufman. Senator Ellis?
Thank you, Chairman. Briefly, I just had a chance to collect my thoughts over the lunch hour as well. And I've been in the situation that Mr. Kaufman's been in. I'm a practicing Wyoming lawyer. Most of my practice is transactional, but on occasion it's not. And I've been in hearings where, parties that are adverse to the work I'm doing will show up, and I've been in that situation too. And so I think it is, we need to remind ourselves what this forum is. We're here to write legislation. Certainly there are processes out there about, if anyone feels like they need to file grievances about committee assignments, about governor appointees, about, to Wyoming lawyers, there are processes out there and those need to be utilized, and that's the right forum for those. There's a reason on the Senate floor and the House floor that we don't use proper names, because we are here to discuss ideas and not particular cases or people. And so I would just urge anybody, if they have those grievances, to talk to the chairman, ask, what the process is, to air your concerns. If our statutes are lacking those clear processes, that's certainly legislation we can look at. But again, that's why we don't use proper names. I think we always can refer to, people without having it be very targeted. So I just want to thank the committee for letting me air that concern and letting me collect my thoughts a little over the lunch hour.
Certainly. Thank you, Senator Ellis. Was there any other public comment? I know, actually, real quick, the Chief Investment Officer, Patrick Fleming, is online. Does he have his hand raised to be admitted and to testify?
Mr. Chairman, he has been admitted and just needs to turn on his mic.
Mr. Fleming, can you hear us?
Yes, my mic's on. Is that not sufficient? Can you hear
me? We got you. We were reading it loud and clear. Go ahead.
Mr. Chairman, Patrick Fleming, CIO for the Treasurer's Office. Happy to answer any questions. Deputy had mentioned some of the comments and so forth that you had, but I'm not really sure what you would like me to speak about.
Mr. Fleming, I think certainly part of the concern was just the making sure that things are labeled properly. For example, I think on page, a lot of the discussion in pertaining as it relates to your expertise was on page 4, that line 20 and 21, the government securities, maturity of no less than 1 year, and elaborating on that in statute in terms of including repo swaps that are secured by government securities alone, that are of a certain duration or of a certain maturity, all that kind of stuff, and making sure. I think one of the questions was, striking the balance between, for example, if we're using repo swaps, that there's a certain maturity of that swap, and we're referring to that agreement alone and not the underlying securities that they're being collateralized with the swap. So, for example, if let's say a 10-year bond that's being pledged, that we're not referring to that, and we're sticking specifically to the length of the swap itself. Those kind of things, and how do we craft that in language, and where do we fit that in, and what does that look like? So that was a lot of the discussion. Now, Mr. Co-Chair, was there anything else that I'm missing that might help Patrick?
Yeah, Mr. Chairman, and to Patrick. So there were a couple of questions. One that I think we resolved to some degree around making sure that we're referencing treasuries instead of broadly government securities, but making sure that when we refer to repurchase agreements, that if we refer to repurchase agreements, will that also refer to a reverse repurchase agreement? That was one area we wanted clarity on. And then I asked Mr. Reville as well whether a maturity would be the right phrasing for a repurchase agreement's lifetime, and it sounds like maturity is the right phrase for that too, whether we choose a week or a month or something along those lines. So just making sure we have the language accurate and inclusive.
Mr. Fleming?
Perfect, Mr. Chair, Mr. Co-Chair. I'll address some of the issues. So, Mr. Co-Chair, when we first started talking about this, years ago, it seems like we were going through this, and just so everyone knows, when we were crafting this language, our number one goal is to protect the state of Wyoming. And that was really what we're trying to do here, because as you know, Wall Street is a very litigious community. And if you lose money, the first thing you do is lawyer up. So that even though, we don't have, the state is not going to be directly issuing the securities, as you know, or the tokens or whatever you want to call them, the possibility of the state being sued is still quite high. There's firms out there that this is all they do is just sue when whenever there's a loss or transaction. So how do we craft the language to cover the state in the best possible way is the number one goal. So when we looked at this, what we were saying is, first of all, we started off with T-bills or what have you, and we're saying we want U.S. government securities, U.S. Treasury securities, whatever you would look at. And once we're getting this specific about the language, personally, I would highly recommend that we just double check with the AG, because the AG's office is going to be the one who is going to be representing us if anyone sues. And what would be the potential ramifications for leaving it very, very broad? So when we did this, what we were saying is we want U.S. government securities. So for all of you, that would include U.S. T-bills, U.S. Treasury notes, and U.S. government bonds. So the nomenclature of each one of them, a T-bill is up to 1 year maturity, a 1 year to a 10-year is a T-note, and a 10-year to a 30-year is considered a bond. So we were saying that we're only going to invest in a 1-year security, but let's say a T-note, a 10-year security that has rolled down has a maturity of less than 1 year, we want to be able to purchase that security. So that's why we're saying U.S. government securities. Now, the next thing is we issue a token, we have cash. What do we do with the cash? Well, you go out and you buy these securities, and what we're saying is up to a year, which would be very important to be able to encompass all of the various amounts of securities out there. And the reason that we're saying that for a year is let's just hope that this thing became really large. There are not enough securities to purchase. You could do repos all day long, but if we actually wanted to go buy securities, there are not enough out there to buy in less than 3 months. If it's a multi-billion-dollar fund, you need to have more securities to purchase, because the rules of the government state is you only get 35% of an auction. You could do non-comps that you could buy up to 10 million, which isn't anything. But if you're really going to try and get 35% of one auction, you would have to bid through the auction so aggressively, very expensively, to be able to get your securities, which would defeat the purpose. The other part of going out to 1 year is that the yield curve is normally sloped, meaning the spot or overnight maturity is usually, the yield to maturity is normally lower than the 1 year maturity. And that average is about 50 basis points. If we're talking about billions of dollars, that is a lot of money. And so leaving that on the table by only doing like a 3-month or something like that would be problematic. Okay, I'm referring here, this was all to US government securities. Now let's talk about repos. Okay, so how do you get an interest rate on your cash? If you have money in your bank or what have you, how does the bank give you the interest rate? Cash is cash. It's what's in your wallet or your purse. There's no rate on it. So what these firms do is they have what's called a sweep, and they take all the cash balances and they go to Wall Street and they repo them. We give you cash, they give us US government securities or any securities. You'd have to state what you're going to do. But if we're investing in only US government or US Treasury securities, whatever you want to say, I would say they're fair pursue with one another, then we were saying before that by that statement of US government securities, since it's still an investment because you could do a US Treasury only repo, that still would fulfill that obligation. Now, the next step, now we're really getting into the weeds here, because when we do a repo, we give Wall Street cash, they give us US government securities. Those securities are not delineated by the maturity. It's not a 1 week, 1 month, 1 year repo. It's US government securities, period. You might get 1 day, 1 week to 30-year maturities. So if we are specifying that we're doing a repo, and like Circle and Tether, these other securities, they say they do the same thing. They say, oh, it's only an overnight. So is the definition the maturity of the repo, which is overnight, or is the definition of the securities that's within the repo that could be out to 30 years? So these are really different things that we had talked about, is like, do we need an AG's opinion, or not an opinion, but guidance is the terminology that Bill Pilger was saying is what they do. Because if they were to represent us, I think that would be something that we'd need to know. So getting back to it, do we need to say only US treasuries or government securities, or are we able, or do we have to delineate to say it will be cash, US Treasury securities, and repos, both reverses and repo? Because if you have cash versus you have securities, one's a repo and the opposite is a reverse repo. So we would want to be able to do both. And then the maturity, my understanding is that the question was, what would be the maturity of the repos? We would be comfortable to say up to 3 months. You could do a repo up to 3-month maturity, because you can do a repo overnight, 1 week, 1 month, 3 months, 1 year. Anything up to 3 months would 90% of the securities the repos would be overnight to 1 week. But you could easily, over the year end and so forth, you could go longer. So potentially a 3-month window would be ideal. Now, the second part of it is the securities we are investing in. I would recommend that we would have that to be out to a year. So that would enable us to take care of that yield curve advantage that we were talking about before. So I talked about a lot of different things here. Let's reiterate. Number one would be, do we need an AG's guidance? Because if we just left it and just said only US Treasury securities, does that encompass the repos as well? Maturity-wise, if you wanted to say the maturity of a repo, it could be up to 3 months. If you wanted to say the maturity of the securities, I would say 1 year and under of US Treasury securities. I said a lot there, Mr. Chairman, Mr. Co-Chairman. I hope that kind of gave you the broad overview of some of the things that we were talking about. Because there's a lot of detail in here, and the concern is if we miss something, and there is a loss on a security, the lawyers will go back and say, hey, wait a second. You said you would only invest in securities up to 1 year. The repos that you put into your securities had 30-year maturities on it. Therefore, you're in breach of contract. That is my concern. So just so you're clear, where my concern is how do we protect the state in the best way?
Well, thank you very much, Mr. Fleming. I know the co-chair and I have some questions, but first let's open up to committee members. Is any questions for Mr. Fleming from the committee members first? I'll deflect to my co-chair first.
Thank you, Mr. Chairman. Mr. Fleming, on the government securities, one of the concerns that was raised with using that specific phrase was that it might be inclusive of other things that we weren't looking for. agency-related securities, debt, et cetera. Do we have an understanding of a specific definition of government securities that is rather universally accepted, or is that one of those terms that we would really have to look into what the AG was contemplating this to mean?
Mr. Fleming?
Mr. Chairman, Mr. Co-Chairman, typically 99% of the time what you're talking about is full faith and credit of the U.S. government, is the government securities, which would be bills, notes, and bonds. Once you get into agencies, as you know, Ginnie's guaranteed, Fannie, Freddie's are not. It's the implicit guarantee, which to me is absolutely not. You don't want to go down that route because the amount of money that you get for investing in Fannie or Freddie is tiny compared to if all of a sudden with our debt levels that we're having, they just made an edict, said the government said we are not going to back Fannies and Freddies. That would be a massive, massive potential loss for us. So the upside is tiny. It's like picking up pennies in front of a steamroller. Absolutely not. So back to your question, is this inclusive of repo or of agencies? I would say not in my lifetime have I ever heard an agency referred to as a U.S. government security. If we're going to go down that route, CDs up to $250,000 are government guaranteed. No one would ever call a CD a U.S. government security. That is the guarantee, not the security.
Well,
Mr. Co-Chair, follow-up?
okay, so if that's potentially the narrow enough definition where we're looking at government securities with a maturity of 1 year or less, would the term government securities, in your view, include repurchase agreements or reverse repurchase agreements of those government securities as this is written, or would that need to be explicit separate language?
Mr. Chairman, Mr. Co-Chairman, that
Fleming?
gets back to the point of the AG. And so, what my view would be and what your view would be is great, but without having them review this, I'm not sure that's what we want to do. And getting back again to what we were doing, we wanted to keep it extremely broad because if we are investing in U.S. Treasury securities, a repo is still an investment in U.S. Treasury securities. We have cash, just like when you go buy a security, you give them cash, you get the 10-year note. If you have cash, you put it into the deal, give it to the dealer, they give you a basket of U.S. Treasury securities. To me, that is no different. But I'm not a lawyer, so I'm saying that is why we use that terminology, to try and encompass everything without getting too specific. So if we were sued, we would have that leeway saying, no, these are U.S. Treasury securities.
Mr. Co-Chair, follow-up?
Thank you, Mr. Chairman. That's helpful. And would it be reasonable for this, and it sounds like it would, rather than saying United States government securities, if we said United States Treasury securities with a maturity of 1 year or less, it sounds like that would be synonymous for the purposes of what we're doing and what we're looking for. Is that fair, Mr. Fleming?
Mr. Chairman, Mr. Co-Chair, yes, the difference there is that, as you know, or some of you out there may not know, but the Treasury is the entity that issues securities, right? The Fed doesn't, no one else does, the Treasury does. So if you're looking at it saying, what are the securities that the Treasury issues? You're talking about T-bills, T-notes, T-bonds, TIPS, Treasury inflation protected securities or whatever, which we wouldn't want to own. They're too illiquid. But yeah, that would fulfill that criteria. I would say that in normal parlance, you use them synonymous with one another, but I don't have an issue one way or another either way. I'd say again that would be an AG's view if you wanted to specify Treasury versus government.
Mr. Chairman, and on that,
Mr. Co-Chairman?
I think that we had Treasury there in the first place. There's a general understanding among those that haven't had this conversation of what that's going to mean, where government securities might feel more broad, even if it ended up meaning the same. So I wanted to understand that nuance. So if it were treasury securities with a maturity of 1 year or less, it sounds like we would need specific language afterwards, or repurchase agreements of US Treasuries with a maturity of, for example, 30 days or less, might need to be explicitly stated based on the point you're making, where it's unclear what maturity means in that instance unless we're explicit. I don't see another way to do it where we can let off the 1 year or less aspect of the Treasury without separately calling out the repurchase agreements. Will that work?
Mr. Fleming?
Mr. Chairman, Mr. Co-Chairman, so just to be clear, we want to delineate, and if we're going to delineate, we want to say both repos and reverse repos. But we want to make sure that that term maturity is clear, in that we're talking about the maturity of the repo and not the maturity of the underlying collateral. Because you cannot delineate to the brokers or the counterparties and say, we want to do a repo, but it can only be securities of 1 year and less. The underlying collateral is the entire basket. There's no one out there will delineate the type of collateral. The vast majority, whether the existing companies out there like Circle, et cetera, they do not delineate. When they say our maturities are only X, they are doing repos, and in those repos are securities out to 30 years. So clearly the street or private sector has made that delineation. And all I'm saying is, if we're going to do it and talk to the AG, we should make sure that we're all on the same page. So getting back to your original question, yes, make sure the securities to purchase, outright purchase, are up to a year, and that the repo and reverse repos could be a term of up to, I would say, 3 months. 1 month could get us by, because the real concern, the real money-making opportunity is over year end. And usually we've done 3-month repos where we got a lot more money, but that would not move the needle dramatically in what we're doing. If you cut the term from 3-month repo to a 1-month repo, that would be fine.
Okay, thank you. And one final question, Mr. Chairman.
Follow up, Mr. Co-Chairman?
And just to be clear about this, and maybe this is another one for the AG, but a repurchase agreement, we understand the difference between a repurchase agreement and a reverse repurchase agreement, but the word reverse is still simply a repurchase agreement where the parties are reversed. So I'm wondering if the words repurchase agreement cover both a traditional repurchase agreement and a reverse repurchase agreement, to the extent that it is still both are repurchase agreement, it's just which party is which party. What are your thoughts on that?
Mr. Fleming?
Mr. Chairman, Mr. Co-Chair, great point. So I've been doing this for 40 years, and we never delineated to say, hey, I want to do a repo. I mean, it's so confusing because a repo to me is a reverse to you. So what we always used to say when we were doing this is whenever I did a repo, it's like, do you have cash or do you have securities? Just to make sure that both counterparties understood, because it's very confusing. So in that instance, I would say, I would 100% agree with you that a repo covers it, but I am not an attorney.
All helpful, thank you.
Mr. Fleming, so I think my co-chairman had some really good questions along delineation, how we define that in statute and strike that balance. My question is more has to do with just kind of the functionality of these markets. So obviously your mission is to protect the Treasurer's Office, the state of Wyoming. In the functionality of some of these instruments in these markets, are we, from a risk management perspective, if we are buying repos that are secured with some of these longer duration, longer term assets, are we taking on, you said that there can be greater return, are we taking on additional proportional risk with those types of, allowing those repos to be collateralized with those longer duration assets?
Mr. Chairman, another great question, and that is something that we do, and I have seen it happen so many times, so many blowups during repos. You think that you are covered, and then a Lehman moment happens or what have you, and you think you have 100 cents on the dollar in collateral, and it's 70 cents. So let's just understand what happens. So typically you have a haircut. So let's just say it's 2% haircut. So if I have cash, I'm going to get 102% in collateral. And at the end of that day, if that collateral drops below par or 100, then the dealer goes out and says, hey, your collateral is less than the 102. You have to bring it back up to that haircut amount, or we're going to liquidate you. And so that is the issue that you have. So when your collateral would be in securities that are very volatile, then you run into that risk. But every day there's a mark to market on those securities, and you have to re-up. Now, the issue that we do, and we do it both with our repos that we do right now, we do billions of dollars of repos a day. I will not take equities as collateral. We only take U.S. government securities. And the reason being is what you pointed out right there. What happens, because I was there in 1987 when the stock market dropped 23% in a day. If you're doing a repo with a counterparty that's weak, you are not going to get your money back. But if you have U.S. government securities, that is the instrument that rallies, that goes up in price. It's the other stuff that goes down in times of stress. So I feel very comfortable, unless there's like a major blow up in the sense of, the government shutdown, or that the government's going to default on their debt or something like that. That would be a much bigger issue, which if that happens, we have much bigger problems than worrying about this. But that would be the only instance where in times of stress, U.S. Treasuries go up in price, not down. So in that instance, I feel very, very comfortable having a longer dated repo. And as I mentioned before, Mr. Chairman, when we do repos, we're giving securities to the longer dated ones, or we're giving. The reason why over the year end there's such a demand for treasuries is because all these corporations want to make their balance sheets look better. And so what they do is they want U.S. treasuries, and that's why they're willing to pay so much for them, to make their balance sheets look artificially better. And so we give them treasuries, they give us cash. So that would be another instance in that example where I'm not concerned with having a longer dated repo. We're covered, one, by the treasuries if we're reversing insecurities, and two, if we're doing repos, then we would be covered in the sense that we have cash, we don't have the securities.
Thank you, Patrick. And one of my follow-ups is, obviously, a big chunk of the repo market is strictly your treasuries as the collateralized asset. But there's a big chunk that are not. Like you said, there's corporate equities, these kind of things. Given that it's a mix of both in these markets, wouldn't it make sense to make that clear in the language here, saying we can do repos, reverse repos, or however that is, only with contracts that are 100% secured with treasuries or U.S. government securities, just to make sure that, like I said, the kind of scenario you're talking about, we'll make sure we're in the clear.
So, Mr. Chairman, that is really what, each level, if we want to get to put into statute every single detail on this, absolutely. So what we were doing initially by saying we are only going to invest in U.S. Treasury securities, by doing a repo, if you're doing a repo with something other U.S. Treasury securities, then I think that would be, breach of what you're saying. But if you really wanted to fine tune it to make sure, because the only reason we're doing this is first to protect the state, but two, for the investors out there, what is the differentiation between us and Circle? That is, we want to make sure that the people out there, hey, we're doing 102% collateral. Are you kidding me? No one does that. Hey, we're only doing U.S. Treasury securities. No one is. Yeah, we want to make sure that they understand your money is rock solid. And we can't guarantee that, we're not going to, have an instance where rates, where it would go down below par. Market can do what it does. But that would, if you feel, or, like the experts like Joel said, if you get too prescriptive here, that is going to turn off an investor. I doubt most of these people really look at it, but I would lean then on our expertise outside here, like Joel, to say, no, they don't care. Whether or not that would be too prescriptive and make people nervous, or whether it's just a better protection for the state of Wyoming.
Mr. Ravel, do you want to hop in on that and chime in?
Yeah, sure. Thanks, Mr. Chairman. And having done a little bit of research over lunch and then listening to Patrick's comments, I think it's going to be hard for us to not separate out repurchase agreements in the description because of the difference in maturity that we're talking about. So in my 2 cents is that you would want to have 3 categories here. There would be treasury securities, and I would use the term treasury securities, not government securities. That eliminates, I think, things like agency debt, et cetera. So treasury securities with maturity less than 365 days. Repurchase agreements, and I believe that could be interpreted to include reverse repurchase agreements as well. It's just a repurchase agreement backed by U.S. Treasury securities with a maturity of less than, say, 30 days and cash. That would be my recommendation.
Thank you, Mr. Ravel. Mr. Co-Chairman?
Thank you, Mr. Chairman. That's similar to what I ended up with. I was going to float the idea of the phrase for the third bin, U.S. Treasury security repurchase agreements with a maturity of 1 month or less. I think that's functionally equivalent, because backed by and I was trying to think backed by or underlying assets, and just decided if I put that out front so that it was U.S. Treasury security repurchase agreements, which I believe all that is accurate as structured, and then with a maturity of 1 month or less is parallel to what we have for the prior sentence. Is that something that I'd look to both Mr. Revel and Mr. Fleming? Are we both okay with that phrase?
Mr. Ravel, let's have you weigh in first on that one.
Thank you, Mr. Chairman. Mr. Co-Chairman, I think as long, your wordsmithing is your craft, not mine. I think as long as the 30 days or less is qualifying the repurchase agreement and not the underlying treasuries, we're good, in my opinion.
Mr. Fleming, did you want to hop in as well on that?
Yes, Mr. Chair, Mr. Co-Chair. That point saying, delineating if you're going to do this, if we're going down this route, to make sure you'd say U.S. Treasury only repurchase agreements with an agreement maturity of no more than 1 month or what have you, just to make sure that there's a difference between the underlying collateral and what the maturity of the repo is. Or just state it saying the U.S. government, U.S. Treasury repo will have a stated maturity of 1 month or less, to make sure that we're not talking about the securities of the repo, would be my comment.
I think that certainly makes sense, and certainly only is a pretty clear word, right? It says U.S. repo securities are only. That makes it pretty clear. Mr. Co-Chair, do you want to?
Yep, thanks, Mr. Chairman. I think that construction is going to work with U.S. Treasury security only repurchase agreements with and then I believe was it stated maturity or resolution maturity? What maturity would it be? What is an adjective for maturity that would be specific to the contract length of the repurchase agreement?
Mr. Revelle, do you want to?
It would be nice if we didn't say maturity, honestly. If there was another way to say that, but maturity is fine as long as we're clear in what maturity we're talking about.
Mr. Fleming? Which one?
Mr. Chairman, Mr. Co-Chairman, when we do a repo, the terminology that we use would be a 3-month repurchase agreement. We don't say stated maturities of X. Now, in the purchase of a security, when we're talking about the difference between buying, I would say the purchase of a U.S. Treasury security with a stated maturity of 1 year or less at the time of purchase. That's different in the purchase of the security as opposed to a repo. A repo, you're not purchasing it. There's a difference there. So I just want to make sure we're talking about the same thing. So in the repo definition, I have never heard the term with a stated maturity, but the purchase, yes.
Mr. Chairman?
Mr. Co-Chairman?
So the construction would be because it's the commission shall invest funds within the account exclusively in. So that's the phrase we're working with, what we're investing in. And then we would say U.S. Treasury security repurchase agreements. And we could say at that point of not more than 30 days.
Perfect.
And only.
I guess we say of 1 month or less is the phrase we have, sorry. But yes, okay, thank you. All right, I think we've got this.
I think we're
some more beating to do.
we're really digging in on this one. Mr. Minority Floor Leader.
Thank you, Mr. Chairman. And Mr. Fleming, thanks for joining us. And so, I mean, ultimately, my heartburn is us inserting repurchase agreements. I understand the protection that we do by doing this, but what I really worry about is trying to explain on the House floor what a repurchase agreement is. And so I would like to hear from my other House members on whether they have any heartburn on being able to bring this language to the floor. And if there is heartburn that ends up happening, would the existing language that we have now in the bill be satisfactory if we need it to bring it back via amendment?
Representative Yu, and I am supremely confident in the talent and skill that we have on this committee, specifically the House members. Obviously, the senators are excellent too. But I think we can do it. I think especially once you frame the context of, hey, this is to ensure that we are adhering to the mission of ensuring maximum protection for the state, that we are honoring our agreement with the token holder, and we're doing it in a way that we can get the return we want for extremely low risk. I think that's a pretty simple message. Obviously, it gets complicated in the weeds, but at a broad level, I think that's pretty workable. Mr. Co-Chairman?
Yeah, Mr. Chairman, the cash and portion is pretty valuable. Keeping that, I think that's the highest value, and to some degree, that's just clarifying. The United States Treasury securities with a maturity of 1 year or less, based on what Mr. Fleming was saying, expands the market dramatically and gives us a sufficient market to achieve a large-scale investment. So that then becomes important if we scale. If we stay small, it may not be important. And then it does sound like the third most important would be the repurchase agreements. And if those have to be lined out to pass the bill, I think that's okay. It sounds to me like that's helping us manage yield and get a little more off of it without increasing the risk. But if it scares the heck out of the chamber, then striking that as the compromise would be, I believe, rational and not, as I see, cause us any problems with liquidity. It would just cause us to diminish the yield potential. And I'd check in with Mr. Fleming and Mr. Revelle to see if I captured that correctly.
Mr. Fleming?
Mr. Chairman, Mr. Co-Chairman, yes, I think you did from terminology that I was saying. And just to get back to Representative Yin comment, that that was the original thought of why we were keeping it so broad, so we wouldn't have to go into that. But then that's clearly up to you whether you could do it, whether you want to make that distinction or not. But, you know, either way that we're fine with it, just I still think that having an AG opinion would give us that extra protection.
Representative Yoon, any follow-up? Seeing none. Committee members, any questions?
Mr. Chairman. I'm sorry, were you calling on me, Mr. Chairman?
Yeah, Mr. Revelle, please go
Yes,
ahead.
thank you. Yeah, I agree. And I just back to Representative Yin's point, I understand the desire to not delineate that, but I think that if you are getting into the distinction that's necessary around maturities, I don't think it's possible to not delineate. I think you just run into a problem where if we're saying government securities up to 1 year, that could create problems in both directions. One, it gives a longer repurchase agreement term than we would ideally like. And two, it might necessarily limit the maturity of the underlying collateral, which would, I think, severely, practically speaking in the market, would severely limit Mr. Fleming's ability to enter into repurchase agreements. So I think it's sort of necessary. And my thought would be that it's in explaining it, it is there are moments in time when a repurchase agreement is safer than than owning U.S. government treasuries, and having that flexibility is important. And then one other thing, if I could, Mr. Chairman, just while I have it, I would suggest that using term instead of maturity for the repurchase agreement. So the term of the agreement, or the agreement term, not to exceed 30 days.
Thank you, Mr. Revelle. I think it makes sense. And to kind of piggyback on your comments, I think as a legislator, the more specificity, the better I generally feel about it, because I know that there aren't any of those classic unintended consequences that we always think about as legislators. So I think if we do have that in there, it gives us the ability to go to our colleagues and say, well, sure, this is a lot of jargon, but it's done in a way so there are really clearly delineated sideboards to protect the state, to protect token holders. So I personally am not too worried about it. But is there any other committee members? I think we're going to go. I know we had the public comment from Patrick, so I guess we're still technically in public comment. Is there anybody else in the room? Or Mr. Fleming, sounds like something else you wanted to touch on.
Mr. Chair, I just want to make sure one thing, that there was comments before about that 1 year maturity of the purchase.
Please go
and
ahead.
How much risk are we putting in the sense of, if rates went up rapidly, would we be at risk of losing money? And, you know, yes, you could lose money in that, and it's not like you're going to put 100%. You'd have a significant amount of cash to meet withdrawals. But just so everyone knows, I just ran it, just so you know, if anyone asks you on the floor, a 6-month T-bill, interest rates at today's rates would have to go up by 425 basis points to lose the 2% cushion that we have. So that's, you know, when we're talking about short duration instruments, it takes a lot of movement in interest rates to do that. And the Fed I can't ever remember, you know, maybe, yeah, I think they went 75 in the 80s, but they don't go more than, 50 basis points typically, and that's every meeting. So the probability of losing more than 2% with these securities is de minimis. So just FYI.
Thank you, Mr. Fleming. So I guess, well, if I might, and we're kind of already really dug deep on this one, but so let's say you go out and you purchase, or you go agree to a 30-day contract for this repurchase of government securities. And let's say, like you say, it's kind of a mixed pot of what it is, but there's, say, 5-year, 10-year, 20-year notes in there. 1 week after you initiate this agreement, this contract, there's an announcement that the overnight rate's going to go up by 50 basis points. What kind of risk exposure would we be in that type of scenario?
Mr. Chairman, it's just like buying a T-bill. You're locked in at that rate. So if you're locked in at 5% and rates go to 5.5%, it's an opportunity loss, not a credit loss or anything else. It's just that instead of getting that 5.5%, you're only getting 5 for that very short period. And then when that repo matures, then you roll it out and get the higher rate. Conversely, when rates are being cut, the same thing happens. Because it's such short maturity, it's not like we would be able to really appreciate in any meaningful way the current rates we're at right now if the Fed was in a meaningful cutting environment. We'd get a little bit of a cushion, but not much.
And just for edification, follow up real quick, Mr. Fleming. So if you do, again, a 30-day term of contract, that rate, whether you're on the reverse repo or on the repo side, the borrower or the seller side, or the lender side, that rate is agreed upon and is fixed throughout the duration of the contract. Is that correct?
That is correct, Mr. Chairman. So whether it's a 1 day, a 1 week, 1 month repo, whatever that rate is, that's the rate that you get.
Thank you.
And the vast majority, 90% of repos are overnight repos, just FYI. The vast majority. And that's what we would do, is because you need to hold cash, right? And so instead of holding cash, you're repoing it to get interest rates. Vast majority of stuff we would do would be overnight repos. 90%
Mr. Co-Chair?
And just to be clear, because risk is very important. Even if things went horribly wrong with our counterparty, we're holding one form of collateral or another. So the counterparty risk is effectively zero under the worst of circumstances, as I understand it. So imagine our counterparty for a 30-day repo is liquidated. It's a bank, and 10 days into it, it no longer exists in any capacity. It's vanished from the face of the earth. Worst possible case scenario, who knows how that's going to happen, but let's assume for it. We still have the collateral on one side or the other, depending on which side of the purchase agreement. And we are in possession of that collateral, which is either yield bearing or not yield bearing. Is that an accurate description? So we don't have risk due to the counterparty engagement beyond the asset, which is either cash or a U.S. Treasury. Is that an accurate description of how those contracts are structured, Mr. Fleming?
Mr. Fleming, please.
Mr. Chairman, Mr. Co-Chairman, I do not like to use the terms always and never. Would be an instance. Mr. Chairman, can you hear me?
I think we lost you for just half a step there, Patrick. Could you start over again, please?
Oh, yes. I was saying that I don't like to use the term always and never, but in this instance, not only do you have the excess collateral, the haircut that I was referring to in the collateral, but also you're in between because it's called a tri-party agreement. So right now, JP Morgan is our custodian, or the other part of the tri-party agreement. They also indemnify the borrower. So you would have to go through JP Morgan and the borrower and the excess collateral to lose. And in that instance, when things would really go pear-shaped, the collateral appreciates, it does not depreciate in times of stress. So we're really protected in numerous factors, but I couldn't say never because I just don't like to use those terms.
Mr. Co-Chair?
We're good. Let's roll.
Never say never. Well, now that we've done a thorough deep dive on
I feel like we're good.
how these work, I'm gonna bust out my E-Trade app. No. All right, we are in the middle of public comment. Is any other public testimony from Mr. Fleming or Mr. Revel? Seeing none. Anybody else in the room? Please, just again, for protocol, just state your name and who you are here on behalf of.
Yes, my name is Dodd Roberts, and I'm here with the American Crypto Fed, and appreciate the chance to speak, Mr. Chairman, Mr. Co-Chairman, the rest of the Select Committee. Just by way of background, I was able to meet some of you, but I began a career 30 years ago in the merchant payment space, 14 of that with the merchant Southwest Airlines, and then the balance of it working with some of the largest merchants in the world on helping them gain some kind of sway in the payment space. They typically live at the bottom of the payments ecosystem food chain, And so we worked hard to help them with that. So I was the founder of the Merchant Advisory Group in that capacity and did that for several years and then had some other work in that space. So my colleagues at the American Crypto Fed and myself are here because we believe we have a high degree of interest in the success of the Wyoming stable token, and we believe we share a mutual goal in the stable token's proliferation and utility, wide utility in the public sphere and with the general public and in the merchant community. So my comments are geared toward factors of the stable token that affect the merchant community. I'd like to speak to those factors that would help, in our opinion, increase merchant acceptance and establish a roadway for the wide acceptance of the Wyoming stable token. So first of all, that would be in the area of the increased competition. I was encouraged that the formation of a state bank is not on the table because use of Wyoming community banks, and the more the merrier in that regard, would increase competition and serve to lower costs. And so that is an attractive factor to the merchants. Second of all, my colleague Troy Carruthers spoke before the lunch break, and he was kinder than me talking about the redemption timeframe. I really appreciate all the conversation, comments about liquidity and the concerns thereof. Because Troy said merchants prefer, I would say that a T+2 redemption timeframe is just a non-starter with merchants. And I appreciate Chairman's response and recognition that there are some major players in the co-chairman's response. I can't remember which one of you, I think you agreed on this point, but
He usually makes all the intelligent comments, so we're just going to assume it's Chris.
but that the players such as the largest merchants in the world are used to very fast turnaround on remittances. So we appreciate that and are glad to hear that. The last thing would be in the area of lower costs. Merchants are great at sniffing out when there are too many costs in the system. Again, merchants are used to being at the bottom of that food chain and seeing mouths to feed that are added in the layers. And so every time that happens, it is seen as a significant disadvantage to merchants. And so I would just draw out three particular things. One is the inclusion of licensed service providers and financial service providers that have been referenced. It's unclear, and maybe it's just I could be more educated on this, but it's unclear as to what level of additional cost those such organizations would add to the Wyoming stable token and the settlement of it. And so if that could be made more clear somehow, but at a minimum, we would say that they need to add none or as minimal as possible cost to those transactions. The second area is it is clear there needs to be some level of administration at the state level in the commission to help monitor and manage the stable token. However, I would again seek to or suggest that administration be kept as at a efficient and small level as possible. In the commission's report, there are several areas of need to staff, and one of the dots just says additional FTEs, which is pretty open. And so I would just, and in that regard also, say that with the inclusion of community banks and other financial institutions that are issuing the Wyoming stable token that already have KYC, AML, compliance, all of those kind of factors that are necessary in their organizations, it may not be necessary for the state to repeat those things and double dip on those kinds of things that are needed. And then lastly, in the area of the development of the token itself, the commission's report references the RFP process that will happen on the development of the developer for the token. Mr. Moeller before lunch also referred to at least a verbal offer by, or suggestion by IOHK that they could use their extensive expertise and experience in developing a token for a really nominal fee. And so if we can, if the state can get things done for the least amount of money possible, again, that's going to be seen with favor from the merchant community. So to summarize all these comments, we are very interested in the success. We have access to and some level of influence with in contact with regard to with a large number of the biggest merchants in the world. And we would love nothing more than to express to them the benefits of the Wyoming Stable Token. And they will look upon that favorably if it's seen to be advantageous to them in all of these regards. So thank you very much.
Committee members, any questions for Mr. Roberts? Not seeing any. Mr. Roberts, I certainly appreciate and understand American Crypto Fed, you have very strong feelings about the issuance and chain and all that kind of stuff. And at the end of the day, we have our processes that we have to follow and being open and transparent, not just saying, hey, we're going with this horse and a discussion. We have to adhere to these protocols of transparency, about inclusion, really making sure everyone gets a chance to be involved in the discussion. And so that's part of what we're doing now. And I understand some of the concern, but you're also seeing an airplane being built while it's being flown. And I think that's something I ask you and anybody else watching to keep that in mind, that this is something that there are going to be adjustments made and amendments here. And that's just, it's just part of the process. And I understand that there's a lot of interest, but it's part of what you have to bear in being involved. So if there are any other questions, thank you very much. Or Mr. Co-Chair?
Thank you, Mr. Chairman.
Thank you for your testimony.
I hope my comments were not seen, I did not intend them as derogatory or seem to be taking shortcuts. I'd definitely understand that process and respect it.
Certainly. Thank you, Mr. Roberts.
Thank you.
We appreciate it. Anybody else? I think we got, please come forward. As is normal protocol, just state your name and who you're here with or representing.
Justin
Is that
Culver.
mic on in front of you? Should be green.
Hello?
We got you.
Justin Culver. I'm here with Bankwise. We have a Speedy charter. It's under WDT. So we hold one of those charters. So my comments are, we're in the middle of a fundraiser right now. We're also building strategic alliances with customers and future customers. And we're spending a lot of time educating, it feels like, the world on what Wyoming has created and what this committee has created. And so my ask or my suggestion would be that we would have support of this committee in the form of maybe a position or someone you appoint to be able to be an evangelist of what you've created, as well as an educator, so that we're not taking on that burden along with the other Speedies. I think that could really help out.
Mr. Culver, you're saying that us legislators aren't good enough evangelists?
Maybe not.
To your point, I agree. It's, we're stretched thin as it is. Your point's well taken. Mr. Co-Chair.
Yeah, Mr. Chairman, this is something that we really do need to start working on. We had it as a topic a few years ago, really trying to market this a little bit better, and we didn't make any gains when we had it as a topic. We should revisit that and try to figure out how we can engage the Business Council. The Commission's going to do some marketing for Wyoming Stable Token, so that's on the horizon. But it is true that the conversation is not widespread enough, and understanding is not widespread enough of what we've got in Wyoming. It's certainly not as deep as we want it to be. So we probably should look for ways that we can get folks actively involved, get engagement at the national level as legislation is being put forward, get into conversations with other states and really try and reach out more. We've certainly accomplished enough that we need to then be evangelizing that work.
Mr. Co-Chair, I wholeheartedly agree. I mean, I think just look at the private sector. When Apple comes out with a new product, all the man-hours and time and money that goes into promoting that and making sure, by God, everyone's going to be aware of this. So I think the comments are well taken. Members, any questions for Mr. Culver? Seeing none, thank you very much for your testimony. Is there anybody else in the room that wants to testify on the stable token or the bill pending before us? So I think we've still got a decent amount of work we got to do to get this out of the committee's hands. Is there any online? There's none. So we're going to go ahead and close public testimony. Committee, what's your pleasure with 24 LSO 0372?
Move the bill.
It has been moved. Is there a second? Second by Senator Furphy. So now we're on the discussion part. I think we covered a lot of ground there. I certainly got my notes about what amendments that we need to work. I mean, Mr. Co-Chair, let's just kind of review about broadly about what we need to work on, and then we can go from there and what that specifically means. And really, a lot of the work centers around the language we want to put in there on page 4. Should we start with that one, or with any others that we should?
Mr. Chairman, that's the only one I know of. I guess we can open it up to see if there's any amendments to propose above the bottom of page 4. But
It doesn't look
that's
like
where
it.
we've
Let's
been
just
focused.
jump right into the
All right.
into it. Mr. Co-Chair, did you want to?
Yeah, Mr. Chairman,
Let's go off your
We'll-
recommendations. We can build from there.
we'll see what we can put together here. So on page 4, move to amend so that we, on line 19, strike the and replace it with a comma. So it'll be cash, comma, United States, change government to Treasury. So it's United States Treasury securities with a maturity of 1 year or less, and United States Treasury security repurchase agreements with a term of 1 month or less. And I think that captures everything. So we're using term instead of maturity at the end. We're just saying repurchase agreements in this. We're assuming that that includes reverse repurchase agreements. And we could have the only if we want to. I didn't include that, but that's an additional point of discussion. So I'll start with this motion, and then we'll see if everyone understands it, then we'll kind of debate the nuances. So to reiterate, if I can, Mr. Chairman.
But yeah, I was going to say that's always step one.
Yeah, let's read through from line 19. It's funds within the account exclusively in cash, comma, United States Treasury securities with a maturity of 1 year or less, and United States Treasury security repurchase agreements with a term of 1 month or less, period. That's my motion.
Members, do we get that? Do we all understand the conceptual amendment here, the language we're proposing? Mr. Hopkinson, are you tracking? Mr. Co-Chair, I think as worded, it makes a lot of sense because, and I think it does hammer, I think it touches on the point that you made and we're discussing is really making sure that we're just talking about the term of agreement on that repo, not the collateralized assets that it's secured to.
Yeah, Mr. Chairman, that's
Mr.
exactly
Co-Chair,
right. And
please.
we can take, I think that language accomplishes in theory everything that we've talked about. But I think we then take that language, if we pass the legislation here, and revet it and get it through the AG's office and make sure they're comfortable with it and just try to make sure that it's ironclad.
I mean, I guess, I know the way it's worded is in comma and U.S. government repurchase securities. Should we put only in there, or do you think it's sufficient as is, that it's clearly talking specifically about that, nothing else?
I think it's clear. I also feel like putting only in there is not very statutory in construct in my mind. That doesn't mean we couldn't do it. I guess I'd look to David perhaps to see if he feels like we need an only, or whether that's implied by, if we say U.S. Treasury security repurchase agreements, whether we would need to say U.S. Treasury security only repurpose agreements, repurchase agreements.
Or only U.S. Treasury security repurchase agreements. Move the only a couple of words before.
I think that would be confusing.
Mr. Chairman,
Mr. Minority Floor Leader?
on line 19, it uses the words, shall invest funds within the account exclusively in. So I don't really think you need only. We have exclusively.
Mr. Hopkinson?
Mr. Chairman, I don't think we need only there. My one, I guess, drafting question really is, do we want and or?
At which point?
Where we've got exclusive, or it would be exclusively in cash, United States Treasury securities with a maturity of 1 year or less, or United States Treasury security repurchase agreements with a term of 1 month or less? Or do we want that to be the and?
As written, it's
As written,
or?
it's and,
It's written as and.
but do we want that to be, does or make more sense there? I guess my concern is, could that be interpreted to require them to have an ongoing investment in all three at the
Right.
same time?
Yes,
So-
exactly.
Mr. Chairman, and yes, the way it was drafted with our first draft has a cash and in Wyoming statutory construction, or includes and, for those that aren't familiar with Wyoming statutory construct. So if we switch to or, then it allows for either an exclusive or an inclusive or, and I think that is the better approach. So let's make it or instead of and, which would unambiguously allow any combination thereof.
It clarifies that it's not cumulative in its requirements. So
So I amend my motion accordingly.
the self-amending amendments, all right. Committee, any further discussion?
Oh, yeah. Hey, let's get a second. Thanks.
I thought we did.
We did on the bill, we didn't for the amendment, that's right.
So it's been motioned, it's been seconded. Is there any further discussion on the amendment? We all understand? Obviously, only committee members or legislative members of this committee can vote. Let's go ahead and just do a voice vote. All those in favor of the amendment, say aye. Aye. All those opposed, say no. That amendment is adopted. We are back on the bill. I think that was really the heart of the contention, unless there was,
That was the hard part.
just scrolling through to make sure.
Roll call.
I think that, yeah. If there's no further discussion, Clarissa, will you please call the roll?
Mr. Chairman, this is a roll call vote for 24 LSO 372, Wyoming Stable Token Act amendments as amended. Senator Ellis?
Aye.
Senator Furphy? Senator Nethercott? Representative Andrew?
Aye.
Representative Singh?
Aye.
Representative Yin?
Aye.
Co-Chairman Rothfuss? Chairman Western? Mr. Chairman, we have 7 ayes, 1 excused.
All right. So now we're still not close to being on track.
We're at 1:30.
We are, yeah, it's 1:30 in the afternoon, folks. So next up is 24 LSO 0103, the Digital Asset Lien Registry. Mr. Hopkinson, are you comfortable coming and walking us through that one?
And 1 second,
Mr. Co-Chair?
can we check in with Mr. Crossman to make sure that, so Secretary Gray was here a moment ago, but I know he stepped out. Is this still okay to go now? Okay, thank you.
We'll take our time for him to return. Mr. Hopkinson, please go ahead.
Thank you, Mr. Chairman. David Hopkinson, the Legislative Service Office, walking through 24 LSO 103, Digital Asset Lien Registry, version 0.4. Mr. Chairman, just a little bit more background on this bill. This comes from a request from the committee at the last meeting to draft a bill that would allow for, or at least kind of start the process for the creation of a digital asset lien registry within the state of Wyoming. This bill is based in part, or frankly in large part, on the commercial filing system bill draft that was from a few years ago, which would have required or did require the Secretary of State's office to look at creating a commercial filing system based on blockchain technology. So some of the language in here you'll see is kind of comports with that. The staff comment up front highlights that the deadlines and the amounts appropriated in this draft are really intended as placeholders. So I would ask the committee to take a close look at what those deadlines should be, what any appropriation should be as this draft goes through that process. And finally, one other thing to note is that this draft does not actually create a statutory framework for the creation of a digital asset lien registry, and that may be something that needs to be put in place prior to a full implementation. This is more of a draft geared at kind of creating a study, looking at what might need to be put into place for full implementation, not actually implementing a digital asset registry. That said, moving on then to page 2 of the bill draft, section 1 provides that not later than June 30th, 2026, again, keep in mind that's a placeholder deadline, the Secretary of State may, and that may I want to highlight as a question for the committee, is this something that they want to require the Secretary of State's office to do, or just give them permission to do? In the draft, with the commercial filing system, it was permissive, and so that's how it is in this draft, but definitely policy question for the committee. Currently, as drafted, it is permissive. Provides that they may develop a filing system through which a person may record a lien against a digital asset. And it requires that they incorporate, to the extent possible, a mechanism to attach notice of the lien to the digital asset itself. Subsection B provides that the Secretary of State shall explore using blockchain technology or other distributed ledger technology as the framework for the digital asset lien registry. It provides that they can include application programming, interface, security measures, etc., that they deem likely to provide for the success of an efficient administration of a digital asset lien registry. On page 3, provides that the Secretary of State may develop a blockchain or other distributed ledger technology for the purposes of this section, or they may explore contracting with others for a privately created blockchain or other distributed ledger technology. Subsection C provides that the Secretary of State may consult with interested parties before developing a digital asset lien registry, including businesses, registered agents, attorneys, etc. And if possible, they may partner with technology innovators and private companies to develop the necessary components of the system, including the University of Wyoming. Moving on to page 3, subsection D provides just some definitions of an application programming interface and a definition for blockchain. Section 2, now we're over on page 4, provides that the Secretary of State may adopt rules to implement this act. And then section 3 provides an appropriation, again, a placeholder amount, $350,000 from the general fund to the Secretary of State to explore implementation of a digital asset lien registry. Subsection B provides that the Secretary of State shall conduct a study regarding the feasibility of the digital asset lien registry filing system, and provides that $250,000 of that $350,000 appropriated shall be used for the purposes of contracting for services to conduct a study regarding the feasibility of the digital asset lien registry filing system, and including potential financial and commercial demand for the registry, necessary statutory changes, technology requirements, and the benefits and drawbacks to a registry. It requires that the request for proposal and retention of a consultant be done in consultation with the Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology, and with the Department of Enterprise Technology Services. And then it requires that the results of the study be reported to this Select Committee and to the Joint Appropriations Committee not later than July 15th, 2025. Subsection C provides that the Secretary of State shall report to the Select Committee and to this Select Committee not later than October 1st of 2025 on all findings and conclusions of consultants and current recommendations for pursuing a digital asset lien registry. Section 4 provides that this act will be effective immediately. With that, I would stand for any questions.
Committee, any questions for Mr. Hopkinson? Well, seeing none, we'll probably have you hang around just in case, but let's go and bring the Secretary of State's office. Secretary Gray. Ms. Grossman, obviously, we know who you are, but you know the procedure.
Thank you, Mr. Chairman. I'm Chuck Gray, the Wyoming Secretary of State, and then I'm joined by Colin Crossman, the Director of our Business Division, to our right. Following September's blockchain meeting, our office, as we discussed with the committee, began a comprehensive review of our systems relating to digital asset registration and the feasibility of incorporating a digital asset lien registry as contemplated by the bill draft before you. As the committee is aware, the passage of Senate Enrolled Act number 95 provides for the registration of digital assets with the Secretary of State. In accordance with the act, our office promulgated rules for its December 1st, 2023 implementation. Since the committee's last meeting, these rules were formally adopted as our technology and business divisions have been working together to ensure technical implementation in accordance with the effective date of the act on December 1st. While at this point it is impossible to say how many digital asset registrations our office will receive, we stand ready to implement Senate Enrolled Act number 95 as scheduled. It should be noted that once our digital asset registration is implemented, our existing statutory scheme and framework will allow anyone to file a UCC financing statement over any asset, including digital assets. Concurrently, our office has been working with our vendor to upgrade our existing business filing system to allow our office to provide enhanced services to our customers while increasing efficiency for our staff in an environment of exponential business filing increases. Specifically, we are seeking to upgrade our systems through a technology upgrade labeled SOS Enterprise, which will allow additional business entity formations and amendments to be filed online. This upgrade will be comprehensive to our existing business entity filing system. SOS Enterprise has been publicly demonstrated and well received by the business community. It was in our budget to the governor's office and was in the governor's budget release last week. Due to its comprehensive upgrade across our business filing systems, I do not believe now would be the proper time to proceed with the bill as written, including a $350,000 appropriation to study and explore the implementation of a digital asset lien registry under a system which may become obsolete if SOS Enterprise is deployed. With that, I'm going to go ahead and yield to Mr. Crossman with the chairman's permission to walk through the timing of the proposed upgrades and the interplay with the bill draft before you now.
Mr. Crossman, please.
So the SOS Enterprise system, which I have mentioned here before, but also we have put into the budget request, is a massive overhaul of the filing system that we have right now. Our current system it was the first in the nation, and it is a little long in the tooth. So we are completely revamping it, and as part of that includes full online filings of everything. That system, assuming that budget component gets passed, will take between 18 and 24 months, assuming everything goes well, to fully implement. If we were to look into a study that adapts the current system, I feel that would be probably a waste of effort. The new system, however, won't be fully online until it's near the end of that. So it is, I think, maybe premature to do this today with our current system in place. One of the most important aspects of any computer system is making sure that it has everything built into it. And at that point, we can look into what the SOS Enterprise is able to do. I believe one of the aspects of it that is most interesting to me is the low code, no code aspect that will allow us to make our own upgrades to that system to a certain extent. So that is my hesitation on this particular thing, especially considering that the UCC filings, once the digital asset registry goes live in 10 days, and I do have a little bit to say about that. Once that goes live in 10 days, anyone who has a registration number can use that number in a standard UCC1 financing statement through our online system today. Now, it's not linked up potentially the way the digital asset lien registry is envisioned, but the ability to file a lien on that asset, we believe, is fully encompassed by our current laws and our current system, at least to the point where people who want to lend on that can lend on that.
Committee members, any questions for Mr. Crossman? Mr. Co-Chair?
Thank you, Mr. Chairman, and I appreciate hearing that that will already be legally available as it goes live. That's certainly useful and helpful. As the SOS Enterprise program runs out, there have been a number of, I guess, features that this select committee and task force before it have been very interested in that relate to cryptographic signatures, assuming that you have a digital identity, assuming that you have something which is a blockchain registered asset, whether that's a digital asset or a DAO or anything else in this space, so that there can be authoritative signatures and perhaps co-signature authentication from the state of whatever that corporate or individual asset is going to be. And this concept of the digital lien recordation is in that realm. The question I have is, and we probably don't need to get too deeply into it today, but I think we would like to be involved in speccing out that future operational capacity. And if we can work with you on that to try and include some of our vision, where you've seen, and Secretary Gray's aware of the fact that we've had legislation in the past to try and provide an opportunity for API-enabled operation as well as cryptographically enabled operation of all aspects of it. Is that something that, based on the timeline, again, assuming that the budget is approved, is that something where we, the Select Committee, can be working with the Secretary of State's office over the next couple of years as this is being built out to ensure that it's compatible with that feature set we're looking forward to? Because I don't think we want to be in a position where you've invested in a new system that then doesn't achieve a lot of the interest that I think we have in a blockchain Web3 enabled system. Secretary?
Secretary Gray, please.
Well, Mr. Chairman, happy to work with the committee and look forward to doing that. And, I guess our budget request on it is pretty lean. I mean, I didn't put a buffer, really put much of a buffer, any buffer in there. So, I mean, if there's a change in what we're trying to do, that's something I definitely need to incorporate into our budget request. But yeah, I mean, once we get on the back end, happy to work with you on that. But I didn't want to do a buffer on there. So that's something I think about a little bit, in terms of having new sort of ornaments on there that would increase the cost. And then I'm in a position in the back end where we got to decide what we're going to do to get it online and what we're not going to do, because we've hit a budget cap. But happy to work with you on that on the back end. And then, even on the front end, if there's something in there that maybe we do need to have a supplemental amendment on the floor in terms of increasing the amount. But, I want to keep it lean as well. I mean, it's a big change. And so we didn't want to have a huge request beyond what was needed.
Ms. Co-Chair?
Yeah, so in particular, a couple of years ago, we had good conversation where a lot of folks, tuned in from all over the planet to say how interested they are in having a cryptographically signed, blockchain enabled, but also you're going to have blockchain integration with existing SQL databases or whatever other databases. But basically the capacity to run smart contracts that engage with the state's authentication as opposed to just some third-party authentication, as well as having the capacity to clearly have, what is effectively a perfect time stamping system if you have cryptographic signatures on a blockchain that we're engaging with. That was seen as game-changing by a lot of stakeholders that were looking for this capacity. And in fact, that great state on the East Coast that tends to take most of the corporate filings were working on a similar project and they abandoned it. And so I think there's a lot of room for that growth, but it sounds like it is more than what is envisioned with the current SOS Enterprise. Is that an accurate characterization, that cryptographic signature incorporated into, again, voluntary, right? I don't have to sign cryptographically, but if I have the wherewithal to do so, would the state have that capacity to countersign and validate cryptographically with the envisioned plan as proposed?
Secretary Gray or Ms. Crossman, go ahead.
As it is currently envisioned, of course, thinking legally, any individual can adapt or adopt whatever signature they wish, electronic, otherwise. So a cryptographic signature in that case can be adopted by an entity to sign a document. The modern construction of software uses a whole host of APIs, internal and potentially external. So the ability to adapt that system once it's in place to add a functionality like that, as opposed to what we have now, is significantly greater. As you also know, with the Digital Asset Registry, there is a Wyoming signature on that in those documents. That particular signature style, I don't know if that would extend currently to the new system. However, any sort of login system to any secure system will require cryptographic signatures of some sort. So the potential to adapt that is there. As to whether or not it's there in the beginning, I do not believe it is from day one. No.
Okay, thank you, Mr. Chairman. And
Mr. Co-Chair.
as a quick follow-up, I think then maybe what we'll do in that capacity is just have some more extensive conversations after this meeting to figure out how we can work with you on developing that feature set. And maybe it is an additional budget amendment where we can look at what you've already budgeted for, figure out what additional that might cost if we were to integrate some of the things that the select committee's been looking at, and then have that as a separate budget amendment. That might be the most appropriate approach. Thank you, Mr. Chairman.
And thank you, Senator Rothfuss. Happy to sit down.
Secretary Gray, please go ahead.
Yeah, thank you, Mr. Chairman. Happy to sit down and maybe be in contact as soon as today. Maybe even after you adjourn, we can hop on the phone, get a time. Happy to do that. And I understand what you're saying. I mean, that you want to have that conversation as we're talking about this system. I had that as a legislator on a few different things, policy priorities I had that wanted to roll into a system change. So I understand where you're coming from, and certainly happy to engage in that conversation. So,
Committee members, any further questions for Secretary Gray or Ms. Crossman? Seeing none at this time, let's go ahead and turn it over to public comment. Mr. Secretary, if you would, of course, stick around just in case if there's follow-up. Welcome before the Select Committee. Protocol is just state your name and who you are here on behalf of.
My name is John Belitsky. I represent Balcony Technology Group. Thank you for having me here. I'm thrilled to be able to participate in what you are building here. I think everybody in this room knows that the world is looking at Wyoming, and I say that unequivocally and with no hyperbole. I spend half the year in southern Spain and the other half of the year in Metro New York City working on blockchain technology for governments and enterprises. And this is where the world is looking. And so I thank you guys. I have great gratitude for the work that you've done in this room. I want to speak today about this lien registry that's being proposed. It's absolutely critical, in my view, to building the type of blockchain technologies that I think we all need. I think that the citizens of Wyoming need, and I think that the United States needs. And it is incomplete to have simply a digital asset registry unless you also have a real-world asset registry, and unless you also have not just the assets, but the liabilities that pertain to those assets. And so the lien registry is absolutely critical, and it must happen. And the analogy here ought to be, you would not hire an accountant who came here and only told you the liabilities of the state, or only told you the assets of the state. These things live within context. And you would not hire an accountant who provides you a profit and loss statement, but no other financial statements. It is the aggregate of these statements. It is within the aperture of these descriptors that assets are defined. And so it's incumbent upon this group to build the type of registries that are complete and transparent. And to do that, they're going to require all the metadata associated with all of these assets. And they have to be on-chain, and they have to be recursively validated, and so that people can trust them and know that they're real and they're true. And so I came here today from New Jersey with my colleagues to provide that testimony to this committee in the hopes that you would take it very seriously, and that you would do just that, and you would continue to push this industry forward. Thank you.
Thank you, Mr. Walensky, for your time. Just hang on a sec. Might be questions for you. Community members, any questions for Mr. Walensky? Am I saying that correctly?
It's Belitsky.
Walensky. Mr. Co-Chair?
So and I believe you're familiar with the digital asset, the Wyoming Registered Digital Asset Act from last year, and the Secretary is going to have that online December 10th. How difficult do you think it would be to add on what we're looking at here with a lien registry, the other half of the ledger, so to speak, from a technological standpoint?
Everything
Mr.
done
Walensky,
correctly.
go for it, please.
Thank you, Mr. Chairman. Everything done correctly is difficult, period, full stop. That doesn't mean that it can't be done, that it shouldn't be done. It should be done, and it can be done. I think the better question is, what would happen if these technologies were rolled out in an incomplete way, and you ended up with a system of Byzantine SQL databases linked to all manner of disparate underlying blockchains, and you abandon the entire premise of a single source of truth? And that is what needs to be avoided at all costs. And so what must be built is a comprehensive framework for the fullness of all this technology to be deployed against all of the assets and all of the liabilities that you seek to describe.
Committee members, any questions? Mr. Kaufman, please, go ahead.
Thank you, Mr. Chairman. Thanks, Mr. Polinsky. I'm just curious, with the projects that you've been working on and kind of the experience you've got, can you walk us through maybe some of the token applications, of a registry like this as you're seeing it?
Yeah, so
Mr. Polinsky, please go ahead.
Thank you, Mr. Chairman. The first thing that we've done is we've described these capital assets. First, real estate. We view a state as a large piece of real estate first that has special overlays, right? You have jurisdictions, you have laws, you have regulations, and so forth. All these are layers that live on top of this digitized asset or tokenized asset. And so we're in the process of doing this in the state of New Jersey for land records first, which we view as absolutely critical to buttressing and supporting property rights, which are obviously the hallmark of our nation, in my view. And so that's the first application. This prevents deed fraud, for example. This allows for instantaneous settlement, which is the principal way that you prevent deed fraud. Instead of a 90-day settlement or a 60 or 30, it's instantaneous. And then downstream from this, we have the ability to attach to that all manner of metadata. So mineral rights, property rights, gas rights, air rights, easements, all encumbrances, and so forth. And so people will have a complete view of an asset at distance without having to, engage in enormously expensive due diligence to derive this information. What that really means and why it matters to a state like New Jersey and to Wyoming ultimately is we are killing inefficiency, and inefficiency is a tax. By removing that tax, we're reducing the cost of transactions and we're increasing asset values. And so this is why it is of value immediately. Beyond that, we have the ability to also attach UCC filings, as the Secretary of State was mentioning, which are critical, and anything that describes any manner of assets.
Mr. Kaufman, any follow-up? Go ahead.
Thank you, Mr. Chairman. Just to follow up, have you had any experience with, essentially forum shopping and choosing a jurisdiction for the disputes of those assets, right? With the underlying agreements. And again, I'm coming at this with a little bit of a limited context. I've worked on some, for example, Bitcoin custody and lending agreements, right? Where there might be a collateral obligation for some Bitcoin. Or, I think the best one that I had in my mind was real estate tokenization, which you mentioned. We have a lot of people working on real estate tokenization in Wyoming, doing that through NFTs of sorts. And so what you're saying makes a lot of sense to me in that respect. But I'm kind of curious about the jurisdiction and how you tie that through and what your experience has been with various forms of digital assets.
Mr. Belinsky, go ahead.
Thank you, Mr. Chairman. I'm not an attorney, but I've spent 25 years in real estate in the metro New York City area. My view is that the jurisdiction runs with the land when you're dealing with land. And therefore, the jurisdiction is obvious. That this is the layer that sits on top of the NFT or the digital asset, as it were. And so I see them as synonymous.
Any follow, Mr. Kaufman? Seeing none. Senator Alice, please.
Thank you, Mr. Chairman. So as I read this bill, I think there are just some question marks I have of, the secretary may set this up, and if he, but we're going to set aside some money. So I feel like if we're, as a committee, going to do it, we should do it. Just say the secretary shall, and make that policy choice. But then I'm looking at the other parts of Wyoming statute that talk about liens and when they attach to property. And so this bill draft just seems a little out there floating in space. It's not anchored to any of our personal property statutes. So I'm curious if you have any experience with that, or like if you have any thoughts of how to make this bill maybe really get to what we're trying to get after if we wanted to go down this path.
Mr. Belinsky, go for it.
Thank you. Yes, our view is that this is a new way for governments to interact with citizens and real property. And in this way, the government acts as sort of a backstop and a validator of this data and of these property rights. I think you ought to do this. I think you should not elect to in the future. I think you should do it now. I think you should do it now within a comprehensive framework that includes buy-in and input, obviously, from lawmakers on if this actually changes in any way or form how government employees interact with these assets. My view is that they do not. My view is that this is fundamentally synonymous with the work that governments are doing today. We're simply digitizing them in this new tech stack.
Senator Alice, any follow-up? Seeing none, Mr. Co-Chairman.
Thank you, Mr. Chairman. I'll just, I'll just note that the Senate File 125 from 2019, when we mapped digital assets under the Uniform Commercial Code, really provides a legal standing for liens associated with digital assets. What we lack, and we're trying to address, and it sounds like to some degree it's being addressed with the Wyoming Digital Asset Registration Act implementation, is how our statute meets the real world use cases of it. So we have the laws on the books, but we don't necessarily have the ability to implement the laws in the way that digital assets would want to see them implemented. For example, just a clear chain NFT that has a lien filing date on it. It's public, everyone sees it. A lien cleansing date, it's public, everyone sees it. And additional liens, lien priority can go on such a thing. So nobody knows where to look, I guess, is what it comes down to. And that's the concern with whether or not we have some sort of a database available. And if we were, as John pointed out, if we have the ability to register digital assets in the state of Wyoming in a very Web3 way, it's important for us to then have a Web3 way to see what liens are on those digital assets, and we're not going to have that accompanying it, other than the fact that at least they can be filed, which is good to hear that we've got a process in place.
I also tag on to that, Mr. Co-Chair, that also, Senate File 125 had that lien cleansing, lien perfection process in the context of Speedies, right, and their assets versus everything that's outside that. And so I think it gives it a lot of extra additional context. Senator Ellis, no follow-up? Representative Singh, go for it.
Thank you, Mr. Chairman, and thank you, John, for being here today. Can you elaborate on what's happening in New Jersey in relation to NFTs representing real estate, as you had mentioned earlier?
Mr. Belinsky, go for it.
Sure. Thank you for that question. So in New Jersey, the interest is not in NFTs representing real estate. The interest is in hardening the records that the state uses to determine property ownership. And so this is a far more secure way for the state and municipalities to maintain those records and keep a single source of truth. And to the co-chairman's point about it being imperative that people know where to look, I have the opposite view. My view is that people should look everywhere, that the information should be ubiquitous, but the source of truth should be singular and it should be conspicuous. And that is the benefit of this technology, is that it provides a bona fide place for people to know with certainty that this information that they can get anywhere is accurate and it is validated by the state.
Representative Singh, any follow-up? Seeing none, any further questions from the committee? Mr. Pope.
Thank you, Mr. Chairman. Mr. Belitsky, I heard you speak to the Wall Street Blockchain Alliance about a year ago, well, a little less than a year ago now. I just want to say thank you for coming out here and welcome to Wyoming. It's nice to have you finally here.
Seeing no further questions, thank you very much, Mr. Belinsky. We appreciate your time and your testimony. Anyone else in the audience that want to testify on this bill? Okay, let's make sure. Clarissa, who do we've got? Is Brendan?
Mr.
Okay.
Chairman, yeah, we do have Mr. Maher.
Let's go
online.
ahead and let Brendan in.
Can everyone hear me now?
Brendan, we can hear you. Go for it.
Oh, great.
You know the protocol, introduce yourself, et cetera.
Yes. My name is Brendan Marr. I'm an MIT Media Laboratory alumnus from 1998. I have been involved in the Wyoming committee working groups for digital identity, the Registered Digital Asset Act, the Dow supplement, and now the DUNA Act that we'll be talking about next. There are a number of things that I wanted to put forth here, which I think would be constructive. First off, I have to say that, as you all know, the issue of cryptographic signing and how that is done and how it manifests in all of these different statutes is really the root of solving all of these problems. Specifically, I want to speak to Secretary Gray's comment about budgeting and costs, and as it relates to what has been proposed in this bill regarding Section 1B, where it speaks of the digital asset being registered and an application programming interface. There's some very important things that Mr. Belinsky, if I have his name correct, has brought out. And not to jump around too much here, but the way to do all this, I'm going to tie it all together here, is to enable the ability to have not just a API, but a specification, basically a publishing of the the protocol of things that get sent to these registries, whether it's the Secretary of State system or the Digital Lien Registry or whatever. And the reason why this is important to understand, and particularly in terms of budgeting, is that it's very, very difficult to program every case, to use a programming language to use a function that covers every single different permutation of what needs to be signed. But if you look at it like this, where you have the computer that does machine-to-machine communication, where they upload, quote unquote, upload and send data to the machine, that data can be signed. So you can have any manner of these things that are on external blockchains, and you can send that to these systems, and you can have those these systems sign those protocols. I mean, this is the way blockchains work, right? Blockchains, when you look at Ethereum or Bitcoin, they don't publish APIs. They publish protocols. The ERC-20 is a protocol. So this is a language independent way of talking about how these things communicate. And it really doesn't cost a lot more to do this. If you have people who are already writing the system, they already know what the protocol is because they know the specification of bytes and all this stuff. So being able to just publish, having competent people, and I know Mr. Crossman and his team, from what they put forth, that they are competent, that by publishing these interactions with the systems as a protocol, it allows for these systems to be able to connect to many other systems in a way in which you have to spend a lot less time and money writing software. I will pause, but I'll take questions. And I have 1 second comment there.
Committee members, any questions on what Mr. Ma has touched on? Mr. Myers touched on so far. Brendan, real quick, just so the numbers that you're seeing in there, it sounds like that's too much and what's being recommended in the bill, that it can be done for much less?
Oh, I'm sorry. Refresh my memory on the number. I missed that part.
In the bill, it's 350,000. You were just talking about how it can be done pretty affordably. So just in
No,
terms of,
I'm gonna go along the party line of Mr. Belinsky. I mean, if you're doing a digital lien registry, I mean, there's a lot to look at to cover everything. So I mean, you have to think about these things in pieces, right? And how much you're going to cover, and the extent that the digital lien registry is going to cover. So is that too much? I don't know. I mean, honestly, but is it too much to do small pieces of this? Yeah, probably to do small pieces of it. It's not too much. I mean, it is probably to do small pieces of it. It's quite a lot of money, but to do all pieces of it is probably not a lot of money. I mean, that's my off the cuff thought on that. But, and this gets, if I may, I'll jump to the second comment I was going to make.
please go ahead.
What I offered to the committee is to think about this comprehensively. By that, I mean, working the path forward. You're talking about a digital registry system, the Secretary of State system, which they're building out for all manner of UCC registrations, which is tremendous. And we're talking about the digital lien registry. And we talked about in the past the need to refurbish or revisit the language for a commercial registered agent, the commercial registered agent statute. And I think what needs to be put forth, and this is something that has come up with the DUNA Act, which we'll be talking about next, that there's also the other piece of this, which is commercial registered agents and the semantics of how they sign things. So when Mr. Belinsky was talking about, metadata, right? What he's actually talking about is that you have these blockchains. The blockchain is the blockchain, but then they refer to stuff off chain. And we've talked about this extensively in terms of public identifiers, right? This goes back to the original conversations that we had about the DAO supplement and how a DAO supplement can refer to a smart contract. How does it refer to that? There's this idea of you have one thing pointing to another. It's the same thing in terms of what Mr. Belinsky has been talking about in terms of metadata. You have stuff that is on the blockchain, or you have in this case, the Wyoming, centralized registry, and that centralized registry really should be something that kind of, collects the references to all these other blockchains, and at some point has to verify that well, not verify, but at least point to and check the stuff that's pointing to the metadata. And that metadata, this is really important. That metadata could be anything, right? Anything that's digital, right? So you could take a PDF of things that are contracts that already are signed, right? You could take a paper contract and sign that and take a photograph of that paper contract, and now it's digital, and then you upload it into the metadata, where blockchain points to it externally, and then you have a reference to that PDF, right? So you don't have to do a lot of coding to do this. You just have to make sure the systems talk to each other in that case. But the important point there, and this came up in the discussions when we were looking at appointment for a registered agent for Duna, and I won't get into that too much. But what you don't want to do is there's semantics there around the registered agent language and how that plays out. Because if you have this thing out on, you have it pointing to metadata, well, it's pointing to something off chain. Is it going to persist? Is it going to be there forever? What are the semantics of the commercial registered agent? Do they need to save a copy of that for certain kinds of things? Things like that, the handshaking. I'll take questions if need be.
Well, thank you very much, Mr. Maher. Committee members, any questions? Representative Singh, go for it.
Thank you, Mr. Chairman, and thank you, Mr. Maher. My question is, so let's say that we were to adopt this and have a blockchain-based digital asset lien registry. If we wanted to include further services on our type of blockchain, such as your various licenses that you could have, or even I was listening to the education committee, they were talking about having things like your resume or like your grades on a blockchain. Would we need to create different types of blockchains for different types of services, or would this all be on the same centralized blockchain?
Mr. Maher?
So the answer to that is, it's important to note that it's inevitably it's not going to be on one central blockchain, right? You're going to have your centralized representation, which it could be a blockchain. I mean, on your side, on the centralized side, it doesn't even have to be a blockchain, right? You just have to reference the stuff that's on these other blockchains. Now, ideally, that's it's probably good to do that. But the way to think about it is that you have the centralized system, your centralized system, whatever it may be, and it needs to point to these other blockchains. I hope that's helpful.
Representative Singh, any follow-up?
Sure. Thank you, Mr. Chairman. I just say that out of concern for how large of a computer system we would need to implement this. So those are my concerns. Thank you.
Mr. Maher, do you have any thoughts?
Yes, certainly. My thoughts are that what the committee does is they do two things. They carve out a very small piece of what they'd want the digital lien registry to register first. The smallest possible thing that they would register, and they use that as their initial prototype to develop. My second recommendation is that concurrently they establish a committee for not just a committee, but a commercial registered agent supplement and a working group that goes along with that, because inevitably in all of this, you're going to have the Secretary of State's piece for certain things. There's going to be the digital lien registry, and inevitably you're going to have parts of all this that will deal with commercial registered agents who will have the function of being able to make attestations for these things. And by that I don't necessarily mean that they're making the attestations, but that they're registering the attestations of other people and verifying that. And if I tell you, I've had a lot of thoughts on this, and the salient point here is that if Wyoming does this correctly, not only will they be able to register these references, these public identifiers, publicly, but they can also do this in a private kind of way through the registered agents, which would allow for things to be public, but also to be resolved privately. And that would be just a tremendous win for the Wyoming jurisdiction, because it would mean that you'd be able to have these things that are on these blockchains. And let's face it, it's all great if you register everything as a in these registries, but they're public registries. So you have to take into account the consequences of things that are on a public blockchain, right? And the way to do some of this is to have those identities concealed, and then if they need be to be revealed in a summons or whatnot, then they would be able to be revealed because the commercial registered agent would have that information. Obviously, there's a lot in here that I'm talking about, but I think you get the idea that as we've talked about before, with digital identity and decentralized identifiers and commercial registered agents being able to provide these additional services, that there's a whole ecosystem of verification that can be developed there. I hope that's helpful.
Thank you, Brendan. Mr. Co-Chairman?
Yeah, Mr. Chairman, I'd just say that, what Brendan's describing, and he's been involved in the digital identity working group that we've had for a number of years, is the concept of providing an overall capacity for the state to recognize digital identity of whether it's our individual digital identities as persons, whether it's an organizational digital identity, whether it's an asset digital identity, where we're currently looking at digital assets being registered within the state. Having an optional but publicly available common system that allows the interaction among all of those entities and allows that to be cryptographically signed and authenticated by the state of Wyoming has tremendous value, and nobody else on the planet has the capacity to do that. This is what we're moving towards. This is what, this bill we're looking at today is just one small step in that direction, which might not be the perfect solution down the path, but trying to further enable that. It gets at what Mr. Belinsky was talking about a few minutes ago, whether that's looking at registering real property or registering individuals. You have the capacity to do KYC AML and educations of individuals, whether they're 21 or not. I mean, anything like that can go into a digital identity if it's appropriately used, and trying to build that out of the Secretary of State's office seems like the most reasonable approach. Again, it would always be optional. Nobody has to opt in and allow for deletion, particularly of individual information. But building towards that, building a solution towards that is going to be incredibly enabling for businesses to operate in the state of Wyoming and to utilize all of the legislation and statutory constructs that we put forward. So appreciate Mr. Marr for bringing up additional points there. So he wants to weigh in a little bit more.
Mr. Maher?
Yes, yes. Oh, that was handing over the mic. Yeah, great.
Were there additional thoughts that
Yes,
you want?
there was one additional comment, and it is,
Go for it.
not to scare the pants off of everybody who's in TV land, but this does not necessarily mean that having signatures and that it's not just we're not talking about a government handed out identity, right? This can be done privately. Blockchains are private. Blockchains are anonymous. It's not that Wyoming is going to be issuing, an identity. If it's done correctly, the way this works is that the registered agents would be able to authenticate you or that person privately. So there's this construct that it's privacy enabling, not the government just taking and issuing you a number. That wouldn't be the way this would work. I hope that helps.
Thank you very much, Mr. Maher. We appreciate your testimony. Let's see if there are no further questions. Is there anybody else on Zoom? Excellent. Well, again, Brendan, thank you very much for your time and input. Please do stick around.
And great job for the Secretary of State. You guys are just tremendous. You're really batting it out of the park. I mean, we've been hoping for all this stuff for years.
So with that, we're going to go ahead and close public testimony. Committee, what's your pleasure with the 24 LSO 0103? Mr. Co-Chairman?
Mr. Chairman, my thought, based on the testimony from the Secretary of State's office, is really that we need to find a way to incorporate a digital asset lien registry into the work they're undertaking through the SOS enterprise, and probably do that through a budget amendment and work with them to prepare that budget amendment so that we provide additional funding to include feature set that we're interested in including. This legislation gets at some of those points, but I appreciate Mr. Crossman and Secretary Gray's concerns about the fact that it seems like it's almost a parallel endeavor at that point when we need it to be integrated into their ongoing work. So I think that we push pause on, I mean, that's my inclination, push pause on this piece of legislation and then work on capturing what's in the legislation, putting it probably in a 300 series budget amendment or something, and working with the Secretary of State's office so that it captures what we're trying to do, but in a way that's consistent with what they're trying to do. That's my inclination.
Yeah, Mr. Co-Chair, I mean, I think if you look at the bill, it does a lot of things, right? I think the concept of authorizing the study, what it has to, the appropriation, all that stuff, I think there's a lot of different things going on here where I think really just the risk of that redundancy and just seems a bit unnecessary. So I think working with them to try to bolster, augment the system that they have now, certainly we'll be monitoring how things progress after the live date next month. I think that makes more sense. And if we want to come back and do a deeper dive on this next interim, in this thing, I think that's probably the best course of action. I know Senator Ellis had some issues with the bill, but absent any objection, I'm just going to table this for discussion for a different time, if that's okay.
Everyone good with that?
Seeing no objection? Excellent.
All right.
So
That leads us to a break.
We're gonna take about a, time is it? It is 3:39. Not quite. And you can't say you have a drive back either, because we're in Cheyenne. Let's go ahead and take a 15-minute break. So it's at 3:55, and we'll work on Dow. So
All right.
see you in 15 minutes.
None of it's good. That's not true, some of it's great.
Okay, folks, let's get this one back on track. We've got one more bill to work. 24 LSO 0104, unincorporated nonprofit DAOs. Let's go ahead and just have our David, LSO David, come through, just give us a high-level walkthrough here on this one. And then I know obviously we've got Mr. Kaufman, I know this was kind of your brainchild a little bit. I know you've got some help here, but let's start with our David and we can go from there.
Thank you, Mr. Chairman. David Hopkinson with the Legislative Service Office, walking through 24 LSO 104, unincorporated nonprofit DAOs, working draft version 0.6. Just a high-level overview of the bill initially, Mr. Chairman, and then I'll go through it in a little bit more detail. The previous version that this committee looked at hadn't really been through review, so this version now has completed internal review. I apologize to the committee. I did promise last time that I would shorten it. Unfortunately,
from what to what?
When I had time to do a more in-depth analysis of the bill, about the first little less than half of it is language that substantial portions of it come from the Uniform Unincorporated Nonprofit Act. But in looking at that and how it incorporates into this bill, it just did make more sense to keep each of those elements with conforming amendments made rather than just referring to that act. So that said, walking through the bill on page 2, first act, well, it does create a new chapter in the corporation statutes. It's creating a 1732-101 through 1732-129. First up is the short title, which would identify it as the Wyoming Decentralized Unincorporated Nonprofit Association Act. Then we get into the definitions on page 2, just to highlight a couple there. First one is administrator, which is just a person that's authorized by the members to fulfill administrative or operational tasks at the direction of the membership. It has some other, I think, kind of self-explanatory definitions in there that are important to the bill, but I'm just going to walk through the ones that I think need highlighted. I would note on page 3, paragraph 3, we've got the definition for a decentralized unincorporated nonprofit association, which throughout the bill you'll see that term used as well as nonprofit association, which means the same thing for purposes of this bill draft or purposes of this act. And that is an association that meets the requirements of an unincorporated nonprofit. It is an unincorporated nonprofit association that meets these following requirements. It consists of at least 100 members that are joined under mutual consent for a common nonprofit purpose, except as provided in 1732-104, which we'll get to here momentarily. That it's an association that has elected to be formed under the act, and that it is not formed under any other law governing the nonprofit association's organization or operation. Got some other fairly common definitions there in digital asset and distributed ledger technology. No surprises there. On page 4, established practices means the practices used by the decentralized. Mr. Chairman, I think I'll just go with DUNA so that I'm not having spend 5 seconds saying that every time. So the DUNA would be those practices associated or that they have implemented during the most recent 5 years of the association's existence, or if it's existed less than 5 years, it would be for their practices that they have in place for the entirety of the association's existence. Governing principles applies to all agreements or any amendment or restatement of those agreements, including the DUNA agreements, the consensus formation algorithms, smart contracts, etc. So those would all be, or potentially be, governing principles. A member on page 5 is just a person who, under those governing principles, may participate in the selection of administrators or the development of the policies and activities of the association. Membership interest is just a person's voting right in a DUNA as determined by their governing principles. Moving on then over to page 6, the rest of, I think those definitions are pretty self-explanatory. On page 7, and back on page 6, we've got section 1732-103 providing the governing law. And that provides that the laws of this state govern any DUNA that is formed in this state, and that a DUNA's governing principle shall identify the jurisdiction in which the DUNA is formed. 1732-104 provides that a DUNA may engage in profit-making activities, but those activities shall be used in furtherance or set aside for the DUNA's common nonprofit purpose. Subsection B provides that a DUNA may not pay dividends or distribute any part of its income to its members or person outside the nonprofit association, except as provided in subsection C, which provides that on page 8, that a DUNA may pay reasonable compensation or reimburse reasonable expenses to its members, administrators, or persons outside the nonprofit association for services rendered, that the DUNA may confer benefits on its members and administrators in conformity with its common nonprofit purpose, that it may repurchase membership interests to the extent authorized by the governing principles. A DUNA may make distributions of property to members upon winding up and termination of the DUNA to the extent permitted in 126, which we'll get to momentarily. Moving on to page 9, it creates 1732-105, dealing with real and personal property, and provides that a DUNA may in its name acquire, hold, or encumber an estate or interest in real or personal property, and it may be a legatee, devisee, or beneficiary of a trust or contract. Section 106 provides for statements of authority as to that real property, and provides that a DUNA shall execute and record a statement of authority to transfer an estate or interest in real property in the name of the DUNA. Moving on to page 10, and it provides that an estate or interest in real property in the name of the DUNA may be transferred by a person so authorized in the statement of authority that's recorded in the office of the county clerk in which the transfer of property will be recorded, and requires that the statement of authority set forth the name of the DUNA, the address in this state, if any, and if it does not have an address in this state, the statement of authority shall include the DUNA's address out of state. And it shall include the name or title of persons authorized to transfer an estate or interest in real property held in the name of the DUNA. Moving to page 11, the action, procedure, or vote of the DUNA, which authorizes that person to transfer the real property and which authorizes the person to execute the statement of authority. And then finally, a statement of authority shall be executed in the same manner as a deed, and requires that that person who executes the statement of authority shall not be the named person in the statement of authority authorized to transfer the estate or interest. It provides that the filing officer may collect a fee for recording the statement of authority, provides that any amendment, including cancellation of a statement of authority, needs to meet the requirements for execution and recording of the original statement, and that unless canceled earlier, a recorded statement of authority or its most recent amendment is canceled by operation of law 5 years after the date of the most recent recording. On to page 12, provides that if the record title to the real property is in the name of the DUNA and the statement of authority is recorded in the office of the county clerk, the authority of the person named in the statement of authority is conclusive in favor of a transferee who gives value without notice that the person named in the statement of authority lacks authority. And so that's just providing some protection for potential buyers. Section 107 on page 12 deals with the liability in tort or contract and provides that a DUNA is a legal entity separate from its members for the purposes of determining and enforcing rights, duties, and liabilities. Provides that a person is not liable for a breach of a DUNA's contract simply because they are a member or administrator or authorized to participate in the management of the DUNA. Page 13, a person is not liable for a tortious act for which a DUNA is liable merely because the person is a member or administrator of the DUNA or is a person authorized to participate in management. A tortious act or omission of a member or administrator or other person for which a DUNA is liable is not imputed to a person merely because the person is a member or administrator or is authorized to participate in the management of the DUNA. We're now in subsection E on the bottom of page 13. Provides that a member or person authorized to participate in the management of the affairs of the DUNA or person considered as a member of the DUNA, that they may assert a claim against the DUNA, and a DUNA may assert a claim against a member, administrator, or person authorized to participate in the management of the affairs. Page 14, onto section 108, providing for the capacity to assert and defend, and providing for standing. This section provides that a DUNA, in its own name, may institute, defend, or intervene, or participate in judicial, administrative, or other government proceedings, or in arbitration, mediation, or other forms of dispute resolution. A DUNA may assert a claim on behalf of its members if one or more of those members have standing to assert a claim in their own right, if the interests the nonprofit or the DUNA seeks to protect are germane to its purposes, and neither the claim asserted nor that relief requested requires member participation. Section 109, we're now on page 15, provides for the effect of a judgment or order and simply provides that a judgment against a DUNA is not by itself a judgment or order against a member or administrator of the DUNA. 110 provides that a DUNA may file in the Office of the Secretary of State a statement appointing an agent for purposes of service of process, and that statement appointing the agent shall set forth the name of the DUNA, the address in this state, if any, of the DUNA. If it does not have an address in this state, it shall include the DUNA's address out of state, and it shall state the name of the person in this state authorized to receive service of process, and that person's address, including the state, their address in this state. We're now on page 16. Subsection C provides that a statement appointing an agent shall be signed and acknowledged by a person authorized to administer the affairs of the DUNA, and it shall be also signed and acknowledged by the appointed agent. Subsection D provides that the filing officer may collect a fee of $5 for filing a statement appointing an agent to receive that service of process, or an amendment or resignation of that. On page 17, subsection E provides that an amendment to a statement appointing an agent shall meet the requirements for the execution of the original. Subsection F provides that if the Secretary of State refuses to file a statement appointing an agent, it shall return the statement to the DUNA or its representative within 15 days, along with a brief written explanation for that refusal. Section 111 provides for the summons and complaint, provides that in an action or proceeding against the DUNA, a summons shall be served on an agent authorized to receive service of process or a person authorized to administer the affairs of the nonprofit association. And if none of them can be served, it may be made on a member of the nonprofit association. Page 18 provides that claims for relief against the DUNA don't debate simply because of a change in members or persons authorized to administer the affairs of the DUNA. 113 provides for venue and provides that for purposes of venue, a DUNA is a resident of a county in which the DUNA has an office or the agent authorized to receive service of process resides. And just for the reference for the committee, for your information, this is essentially where we end the uniform words escaping me, I apologize. The Uniform Nonprofit Association Act is an existing statute. That's kind of where that ends. And from here on out, this is just for the DUNAs. And that,
Mr. Co-Chairman?
So on that point, just maybe a little bit more. So that first, basically half of the legislation is basically statutory construct that exists for unincorporated nonprofit association at this point in time.
Mr. Hawkinson?
Mr. Chairman, that's correct, with at times fairly substantial conforming amendments, which is why I didn't just reference that act itself. So there are notable differences between the two, but for the most part, they are extremely similar.
Mr. Chairman.
Mr. Co-Chairman?
So I did have a couple of questions about, which almost seems like we do things a bit differently with what I'm going to call a registered agent, although it's not explicitly referred to as a registered agent, but where you have the possibility of a may have someone in Wyoming, whereas for most of our corporate structures, it's a shall have someone within Wyoming. But we're already doing that for the unincorporated nonprofit associations elsewhere in statute. That's conforming also, or is the way this is structured where you may have someone designated in Wyoming as an agent, new language for this?
Mr. Hopkinson?
Thank you, Mr. Chairman. That is an excellent question, and that may is consistent with what's in the Uniform Act, and certainly something for the committee to consider if it makes sense to require, consistent with other business forms, that it be mandatory that they have a registered agent.
Gotcha. Thank you.
Please proceed, Mr. Hopkinson.
Page 18, moving on to section 114, the perpetual existence. Moving on to page 19, that provides that a DUNA has perpetual existence unless its governing principles otherwise specify. A DUNA may be dissolved by any of the following methods. If the governing principles of the nonprofit association provide a time or method, by that method. If the governing principles of the nonprofit association do not provide a method, then by approval of its members in accordance with 120, which we'll get to. If membership of the nonprofit association falls below 100 and the DUNA does not meet the requirements of a Wyoming unincorporated nonprofit association, and in the event that membership in the nonprofit association falls below 100 and the DUNA does not meet or meets the requirements of a Wyoming unincorporated nonprofit association, then it automatically converts to a Wyoming unincorporated nonprofit association unless the governing principles otherwise specify. Or if it specifies another type of organization and it meets the statutory requirements of that organization, or by court order. We're on page 20. Subsection C there provides that after dissolution, a DUNA continues in existence until its activities have been wound up and terminated pursuant to 126, which we will get to shortly. Section 115 provides that a person becomes a member in accordance with the governing principles of the DUNA, and if there are no applicable governing principles, a person shall be considered a member upon purchase or assumption of ownership of a membership interest or other property or instrument that confers voting right within the DUNA, and the person shall continue as a member absent suspension, dismissal, or expulsion, or resignation, or the DUNA's dissolution and wind-up. We're on page 21 now. Subsection B provides that subject to the governing principles, a member may be suspended, dismissed, or expelled from a DUNA. If there are no applicable governing principles, they may be suspended, dismissed, or expelled by approval of its members in accordance with 120, which we'll get to shortly. Subsection C provides that unless otherwise provided in the governing principles, suspension, dismissal, or expulsion does not relieve the member of any obligation incurred or commitment made before the suspension, dismissal, or expulsion. 116, page 21 and 22 provides for the resignation of a member, provides that the member may resign as a member of the DUNA in accordance with the governing principles. And if there are no applicable governing principles, they'll be deemed to resign upon the disposal of all membership interests or other property or instruments that confer a voting right within the DUNA. And subsection B provides that unless otherwise provided for in the governing principles, resignation of that member does not relieve the member of any obligation commitment incurred before the resignation. 117 provides for the duties of members and provides that unless otherwise provided for in the governing principles, that a member does not have or shall not have any fiduciary duty to the DUNA or to any other member of the DUNA solely by reason of being a member, and that all members shall be subject to the implied contractual covenant of good faith and fair dealing. We're now on page 23. Section 118 provides that a member has no agency powers and provides that a member is not an agent of a DUNA solely by reason of being a member, and a person's status as a member does not prevent or restrict laws other than this act from imposing liability on a DUNA because of the member's conduct. 119 provides for the member interest being transferable and provides it, again, except as otherwise provided in the DUNA's governing principles. A member interest or any right thereunder is freely transferable to another person through conveyance of the membership interest or other property that confers upon a person a voting right within the DUNA. Page 24, section 120 provides for approval by the members and provides that except as otherwise provided in the governing principles, a DUNA shall not have the approval of the majority of membership interest participating in a vote to suspend, dismiss, or expel a member, to select or dismiss an administrator, to adopt, amend, or repeal the governing principles, to sell, lease, exchange, or otherwise dispose of the DUNA's property, to dissolve the DUNA under 114, which we saw previously, to undertake any other act outside the ordinary course of the DUNA's activities, to determine the policy and purpose of the DUNA. It also provides, we're now on page 25, subsection B provides that a DUNA shall have the approval of its members in accordance with its governing principles to perform any act or exercise a right that the governing principles require to be approved by members. And unless otherwise provided for in the governing principles, a membership interest shall be calculated in proportion to a member's voting rights within the DUNA. Section 121 provides, now on page 26, that a DUNA may provide for its governments in whole or in part through distributed ledger technology, including smart contracts. The governing principles for a DUNA may specify whether any distributed ledger technology utilized or enabled by the DUNA will be fully immutable or subject to change by the DUNA, and provide whether any distributed ledger technology will be fully or partially public or private. It may provide, or a DUNA, the distributed ledger technology may adopt voting procedures, which may include smart contracts deployed to distributed ledger technology that provides for the following. Provides for proposals from members or administrators in the DUNA, for upgrades, modifications, or additions to software systems or protocols, provides for other proposed changes to the DUNA, associations, or to the governing principles, and provides any other matter of governance or activities within the purpose of the DUNA. On page 27, section 122 provides for the consensus formation algorithms and governance process, and provides that in accordance with the governing principles, a DUNA may adopt any reasonable algorithmic means for establishing consensus and the validation of records, as well as establishing requirements, processes, and procedures for conducting operations or making decisions with that distributed ledger technology, and provides that in accordance with any procedure specified in 121, which we saw previously, may modify the consensus mechanism as well as other requirements, processes, and procedures, or substitute a new consensus mechanism, requirements, processes, procedures that comply with this state's laws and the governing principles of the DUNA. On page 28, section 123 provides for the selection of administrators and the rights and duties of administrators, and provides that unless otherwise provided by the governing principles, the members of a DUNA may select the DUNA's administrators. If no administrators are selected, none of the members shall be considered administrators for the DUNA. On page 29, subsection C, provides that no DUNA shall be required to have an administrator, and the rights and duties of all administrators shall be established as part of the authorization of authority to act as an administrator. Subsection D provides that if in a record, the governing principles of the DUNA may limit or eliminate the liability of an administrator to the DUNA or its members for money damages, for any action taken or failure to take any action as an administrator, except liability for the amount of financial benefit improperly received by an administration, an intentional infliction of harm on the DUNA or its members, an intentional violation of criminal law, breach of the duty of loyalty, should one exist, unless following full disclosure of all material facts to the DUNA members, the specific act or transaction that would otherwise be a breach is authorized or ratified by the members, or for improper distribution. So those are just things that they cannot limit the liability for. Page 30, section 124 provides for the right to inspect records of the DUNA and provides that except as provided by subsection B of this section, that on reasonable notice, a member of the DUNA shall be entitled to an electronic record of any record maintained by the DUNA regarding its activities, financial condition, and other circumstances, to the extent it's material to a member or administrator's rights and duties under the governing principles. A DUNA shall not be obligated to provide records requested from a member or administrator if access is contained in a record available to them through distributed ledger technology.
Mr. Co-Chairman?
Thanks. If I can interrupt there, is that language, those two paragraphs, and I guess you should ask this about some of the other ones, but these two stand out, identical to our Dow LLC, same phrasing? I mean, we have those provisions, but is it the same phrasing?
Mr. Hopkinson?
Mr. Chairman, and to clarify, you're referring to subsection A and B?
Of 124, yeah, we have right to, I know we have right to inspect records, and a lot of that sounds very familiar. I'm trying to find the places where we were able to copy and paste from our Dow LLC Act into this act so that we have conformity between the two acts wherever we're able to.
Mr. Hopkinson?
And thank you, Mr. Chairman, and I would defer.
Hi, thank you. Hi, my name is David Kerr. Quick introduction. I was the one who did draft the initial version of this bill for submission. I did it in partnership with Miles Jennings, the General Counsel for A16Z. We put together a series of papers on the entity structuring problems here. And so just to follow the form of the meeting, that's kind of my introduction. Yes, that was a deviation from the UNA, where there is no right to inspect records. The reason why UNAs don't carry that right in Wyoming and under the Uniform Act generally is that they're designed to accommodate, unsophisticated, informal operations as well. And so they may not have rights of records. And so it seemed like it made a lot of sense to deviate from that, since this is an electable form that's going to require quite a bit more formality, and to then utilize the same language from the Dow supplement that already exists in Wyoming law. So that language conforms almost exactly. There were just some minor differences and just making it more uniform between, just kind of trying to keep things consistent.
Mr. Hopkinson, please proceed.
Thank you, Mr. Chairman. Subsection C on page 31 provides that a DUNA may impose reasonable restrictions on access to and use of the information that might be otherwise provided under this section, including designating the information as confidential and imposing non-disclosure or other safeguarding obligations on the recipient. In a dispute concerning the reasonableness of that restriction, the DUNA would have the burden of proving reasonableness. Subsection D provides that a former member or administrator may have access to information to which they would have had access or been entitled to as a member or administrator if the information relates to the period of time during which they were a member or administrator, if the former member or administrator seeks the information in good faith, and if it satisfies the requirements of subsections A through C, which we just looked at with respect to that information. Subsection E then provides that a DUNA shall not be obligated to collect and maintain a list of members or individual member information, including the names or addresses of its members. So it does not have that obligation to collect or retain that kind of information. Page 32, section 125, provides for the indemnification and advancement of expenses, and provides that unless otherwise provided in the governing principles, DUNA may reimburse a member or administrator for authorized expenses reasonably incurred on its behalf. It may indemnify a member or administrator for any debt, obligation, or other liability incurred in the course of the member or administrator's activities on behalf of the DUNA. And to be eligible for this indemnification, they must have complied with the duties stated in the previous section. And if in a record, a nonprofit association's governing principles may broaden or limit the right to indemnification. Subsection C, we're on page 33, provides that if a person is made or threatened to be made a party in a proceeding based on the person's conduct in a DUNA, the person is entitled upon written request, including through decentralized ledger technology, to receive payment or reimbursement by the DUNA of reasonable expenses, including attorney's fees, that are incurred by the person in advance of final disposition of that proceeding. And to be entitled to those payments, they have to make a request that they believe is in good faith, that, and that if it's not in good faith, then they would have to repay the amounts that were reimbursed, and that no payment or reimbursement under that section would be made without prior approval of disinterested members. I apologize, Mr. Chairman, I was just pausing there to note that statutory citation, which I believe is an error, so I'm going to have to fix that. Section 34, subsection D, provides that a DUNA may purchase and maintain insurance on behalf of the member or administrator for liability asserted against or incurred by the member in their capacity, whether or not DUNA would have the power to indemnify or advance expenses against the same liability in this section. And he provides that the rights of reimbursement, indemnification, and advancement of expenses apply to former members or administrators for activities taken on behalf of the DUNA while they were members. Section 126 provides for the winding up of a DUNA and provides that they shall wind up their operations and the DUNA shall continue after dissolution only for the purpose of winding up. Subsection B provides that in winding up a DUNA, the members shall discharge the nonprofit association's debts, obligations, and other liabilities, and settle and close the DUNA's business and distribute any remaining property. And that shall be done as required by state law, other than this chapter requiring assets of an association to be distributed to another entity or person with similar nonprofit purpose, or in accordance with the DUNA's governing principles, and in the absence of applicable governing principles to the current members or of the DUNA in proportion to their membership interests, or if neither of those previous subdivisions apply, then it would be in accordance with the law of unclaimed property contained in 3424-101 through 140. And then, again, back in winding up a DUNA, the members may authorize an administrator to wind up the DUNA in accordance with section 120, that any administrator so authorized shall conduct or shall owe the DUNA a duty of care in the conduct of winding up the DUNA, and to refrain from grossly negligent or reckless conduct or a knowing violation of the law. The members may preserve the DUNA's operations and property as a going concern for a reasonable time. They may prosecute and defend actions and proceedings, whether civil, criminal, or administrative. They transfer the nonprofit association's property, settle disputes by mediation or arbitration, or perform other acts necessary or appropriate to winding up. We're now on page 37. Paragraph 3 there provides that if the members of a DUNA do not appoint an administrator to wind up the DUNA, the members shall owe the DUNA a duty of care in the conduct of winding up the DUNA's operations, and to refrain from that grossly negligent, willful, intentional misconduct, or violations of the law. Section 127 provides for mergers. And first up, we see a number of definitions associated with mergers, including a constituent organization, a disappearing organization, governing statute. I think most of those are pretty self-explanatory. And so we'll jump to page 39, subsection B, provides that a DUNA may merge with any organization that is not expressly prohibited by law, that the merger involving a DUNA is subject to these following requirements, that each of the constituent merging organizations comply with governing law, that each party to the merger approve a plan of merger in accordance with its governing principles, that the plan be in a record and include the following provisions: that the name and form of each organization that is party to the merger, it include the name and form of the surviving organization, and if the surviving organization is to be created by a merger, a statement to that effect. It would include the terms and conditions of the merger, including the manner and basis for converting the interests in each constituent organization into any combination of money, interests in the surviving organization, or other considerations. That it include, if the surviving organization is to be created by the merger, the surviving organization's organizational documents that are proposed to be in a record. And if the surviving organization is not to be created by the merger, any amendments to be made by the merger to the surviving organization's organizational documents that are or proposed to be in a record. On page 41, paragraph 3, provides that the plan of merger be approved by the members of the DUNA. That is a constituent organization in the merger, subject to those member voting in 120. If a member of a DUNA that is party to a merger will have personal liability with respect to an obligation of a constituent or surviving organization, the consent in a record of that member to the plan of merger shall also be obtained. Paragraph 4 provides it's subject to the contractual rights of third parties after a plan of merger is approved, and at any time before the merger is effective, a constituent organization may amend the plan or abandon the merger as provided in the plan. Paragraph 5 provides that following approval of the plan, a merger under this section shall be effective if, on page 42, a constituent organization is required to give notice to or obtain the approval of a government agency or officer in order to be a party of the merger, and the notice has been given and the approval has been obtained. The surviving organization is a DUNA as specified in the plan of merger, and upon compliance by any constituent organization that is not a nonprofit association with any requirements, including any required filings in the Office of the Secretary of State, the organization's governing statute, or the surviving organization is not a DUNA under the state law by governing the surviving organization. Subsection D provides when a merger becomes effective. When a merger becomes effective, the surviving organization continues or comes into existence. Each constituent organization that merges into the surviving organization ceases to exist as a separate entity. All property owned by each constituent organization ceases to exist, vests in the surviving organization. And that all debts, obligations, or other liabilities of each constituent organization that cease to exist continue as debts, obligations, or other liabilities of the surviving organization. An action or proceeding pending against any constituent organization that ceases to exist may be continued as if the merger had not occurred. And that except as prohibited by other law, all of the rights, privileges, immunities, powers, and purposes of each constituent organization that cease to exist vest in the surviving organization. Page 44, paragraph 6 provides that except as otherwise provided in the plan of merger, the terms and conditions of the plan of merger take effect. And the merger shall not affect the personal liability, if any, of a member, administrator, or manager of a constituent organization for a debt liability or obligation of the DUNA incurred before the merger is effective. And a surviving organization that is a foreign organization consents to the jurisdiction of the courts of this state to enforce any debt, obligation, or other liability owed by a constituent organization. If before the merger, the constituent organization was subject to suit in this state on the debt or other liability. And the surviving organization that is a foreign organization and not authorized to transact business in this state appoints a Secretary of State as agent for service of process for the purpose of enforcing a debt or obligation under this section. Page 45, property held for a charitable purpose under the laws of this state by a domestic or foreign organization immediately before a merger under this section becomes effective shall not, as a result of the merger, be diverted from the objects for which it was donated, granted, or devised, unless required by law or pursuant to the law of the state concerning non-diversion of charitable assets, the organization obtains an appropriate order of the Attorney General or the District Court in a proceeding for which the Attorney General has been given notice specifying the disposition of the property. And F provides that a bequest, device, gift, grant, or promise contained in a will or other instrument of donation, subscription, or conveyance that is made to a disappearing organization and that effect takes effect or remains payable after the merger, it inures to the benefit of the surviving organization. It further provides that a trust obligation that would govern property if transferred to the disappearing entity applies to property that is instead transferred to the surviving organization. Page 45, section 128 provides for the conversion and provides that a decentralized DUNA may effect a conversion by complying with the applicable provisions of 1726-101 and any applicable provisions of the DUNA's governing principles. Section 129 provides for the supplemental principles of law and provides that principles of law and equity supplement this act unless otherwise displaced by a specific provision of this act. The act would be effective July 1st, 2024. And Mr. Chairman, I didn't time myself, but I don't know if that was under 15 minutes or not, so I tried.
Thank you, Mr. Hopkinson. If only you got paid by the word, right? Thank you, David, for walking us through that. Mr. Kaufman, could you maybe elaborate on why this is here and give us some context on the 46 pages that we just went through? Give us, just for the edification of the committee, and kind of bring us up to speed.
Yeah, Mr. Chairman, I think, so the genesis of this bill and the idea is that obviously we took great lengths to enact the Dow LLC supplement, right, as an alternative entity structure that DAOs could elect. This is another alternative. Instead of a for-profit entity, this is a nonprofit entity. So it's simply building on the concepts that we already have with the Unincorporated Nonprofit Association Act and creating a decentralized version of that. One of the reasons that this came to my attention through Mr. Kerr and others was the large protocol DAOs that we see that are building decentralized governance models and operating in the digital asset space. And a lot of them don't really have a home, right, or a place to fit into an existing structure. And, you know, just an observation I've made in my practice helping many DAOs form, and that is sort of the process or the journey that they take, right, from either the formation and trying to start with a few actors or community members and migrate towards a truly decentralized model is really cumbersome, and obviously depending on the business model can be incredibly risky. And so again, this act is attempting to create some generally applied principles, right, that create structure and rule sets for how these protocol level DAOs and these nonprofit organizations can operate.
Thank you, Mr. Kaufman. Mr. Kerr, tell me about some of these protocol DAOs.
So a protocol DAO functions around an existing, call it smart contract, an automated execution that happens on the blockchain. It allows for a decision to occur really without the input of human beings. And if that's all that was going on here, then we would not need entity structures around any of that. That would simply be technology that functioned. A good example of that would be the SMTP protocol that underlies email exchanges. It's a decentralization of information across the internet. It gets divided up into nodes, gets separated out and repurposed down the road as an email. Email does not have a way of collecting value from every email that's sent. And because of that, it had not really kept up with the times on encryption. And so if you were to send just on the protocol we all use for email right now, you would not be able to send an encrypted email. And that's where the privatization of encryption that sits on top of that becomes part of Microsoft Outlook or Gmail comes from. They've spent a lot of money on their own to build an encryption layer that sits on top of an executing protocol. What these protocols are able to do on the decentralization, the blockchain, the Web3 premise is that there's a very big need for something like email, whether it's the exchange of tokens, the exchange of information, the exchange of assets, for that to be done in a way where the responsibility of paying for that upkeep stays internal to the protocol itself. And so the users of that protocol form around the governance of it and have control over the value extracted from the protocol. So it's a big difference than, a protocol that does not extract value. Well, when you have people, human beings, making decisions around large sums of money and how it gets spent, then we implicate situations of, potential liability, the ability to pay taxes, the ability to sign contracts, the ability to do what it needs to do to be responsible for that money. And so what this entity bill does, with the intent of building an entity structure around it, is to have an entity form capable of paying taxes at the federal level, meeting the significant informational and operational reporting requirements to stay compliant, to be able to sign those taxes and contracts as necessary, and present a more clear path to the assets of the organization being used to pay off any liabilities and having that not flow down to the members, because there is value there. And it makes more sense for that value to be what pays for any, costs that come up down the road than, dividing up the profits, passing them down to individuals, and then having that money flow back from the individuals. It's just a much cleaner, smoother process. And so it basically allows for the election of corporate taxation, a cleaner liability profile, and the ability for those groups of people around the technology where the value is being extracted to have an entity form.
Thank you, Mr. Kerr. A follow-up would be, so it sounds like there needs to be some sort of regulatory framework for the equal distribution of costs, profits, responsibilities, liability, all that stuff. So it probably stands to reason that there are some of these protocol DAOs that feel homeless and are looking for a home. Is that true?
I would say the big problem is that the vast majority of major protocols are entityless in that they exist without a home and are unable to do any of that. Or the proliferation of offshore environments like the Cayman Islands, where a lot of these protocols kind of transfer assets and put a board in place, and then we're offshoring the operation function wherever decisions are made by humans to a place that's outside the jurisdiction of America. And obviously, when you think about that from the ability to have an effective regulatory scheme, offshoring to the Caymans, doesn't really work for our purposes as America.
So, Mr. Kerr, follow-up would be, or maybe if you wouldn't mind, tell me a little more the nature of some of these protocol DAOs. I mean, the sheer size of them, how well capitalized they are, those kind of things.
Yeah, I think the biggest one you always want to point to is Uniswap. It's the decentralized exchange that allows for individuals to access the ability to exchange the form of their cryptocurrency, the tokens that they utilize. It's an exchange platform set up on a series of protocols where there's an atomic swap through the smart contracts. Well, each one of those transactions has the ability to take on potentially a collection of fees. There's always the opportunity for Uniswap to turn on the fee switch and start accruing a small amount of value from the overall transaction of a Uniswap transaction. And that's how it directly generate revenue. But right now, the collection of users and founders and creators, the way they interact with these protocols is through what's called governance tokens. And it's basically a token that allows for a vote in the decision of, depending on what rights they have within the rights given to them by the technology to make decisions. Well, those treasuries are very large at this scale. And those treasuries have a significant amount of governance tokens within them that carry a value on a market. And so in order to be able to fund expansion of projects, to be able to fund grants, to be able to pay for operational costs around reporting requirements, the members of the community could take some of that treasury and sell it and use that money to meet some of the obligations around the protocol. So it gives them the opportunity to actually fund some of the compliance themselves. And so having that ability is really important. But then when you start dealing with individuals, people dealing with issues of how they deal with money, doing that outside of a regulatory scheme and doing that outside of an entity scheme is obviously problematic.
Mr. Co-Chairman?
Thank you, Mr. Chairman. What other jurisdictions currently have functional DUNA legislation or statutes in place whether that's domestic in the United States or globally?
Mr. Kerr, please go ahead.
I'm sorry. Thank you, Mr. Chair. So right now, the DUNA is in the early stages. California has passed in the House through one of their committees a version of this law pertaining to California law, which is very different. They did not adopt the Uniform Act. In this last legislative session, Texas passed through the House a very similar version to the law that was proposed to Wyoming. And then it did not complete the legislative calendar. It wasn't voted down. It just didn't get a hearing at the end of legislative session because of timing concerns. And it did not get a vote for the Senate. So it had passed the House. But the underlying, law of the DUNA is the UNA. And there are 9 jurisdictions that have the same Uniform Act as Wyoming. And in a lot of ways, the rights and abilities to utilize those 9. There's also another, call it 10, who've adopted a revised version of that, a more modern version. In a lot of ways, a lot of the extra language comes from the provisions of that would be useful. The Uniform Acts did not consider internal governance in the early stage of these projects because who can use an UNA is so wide. And so what the DUNA tries to do is say, well, who can use a DUNA is much more narrow than who can use an UNA. And because of that, a lot of these internal governance issues can be provided for in more clarity. And that's what gives the added length to the bill, but it also gives the certainty to the individuals who would intend to use it. So that's one of the primary improvements of the DUNA, is that if you've read the UNA on Wyoming, there's a lot of questions that have to be figured out with lawyers in the drafting and how you're going to go about doing it. This law, even though it's robust, answers those questions so it doesn't become an academic exercise and it's just easier to implement and better understood.
Great. Follow up, Mr. Chairman?
Mr. Co-Chairman?
And can you tell us a little bit about why an entity would want to opt for DUNA rather than utilizing our LLC DAO, for example? Can you, we know that's taking place, but if you'd
Mr. Kerr?
Talk to us about that.
Yes. Well, in a lot of ways, it comes back to the fundamental nature of what these projects are. And the decentralized forms fit a lot more closely in trust law. Well, trust is where we started this exercise of what we kind of thought this organization should be. These members hold these assets in trust for this project and they spend the money. It follows trust in a lot of ways. Well, unfortunately, in the regulatory scheme in America, we have 50 states and then a federal government that sits on top. And so the legislative regulatory environment is very difficult. And in relation to the ability for LLCs to effectively hide assets as it relates to the Panama Papers, the Pandora Papers, and the Paradise Papers, there was an act passed 2 years ago in one of the defense acts that contained a provision called the Corporate Transparency Act. That's the international beneficial reporting, ownership, and control requirements. We're not at this time planning on participating in international regime, but it's a very disclosure-heavy environment for a type of harm that this type of entity would not be able to effectively effectuate. Putting itself in a situation where it's at risk for $2 million in penalties, jail time, serious penalties for not having access to information about the ownership levels and being able to follow the reporting requirements for a harm that it can be demonstrated that it does not have the ability to do, is something you want to avoid. And so unfortunately, the reality is the DAO supplement and the LLC and LLCs in general, because of the nature of how the power for the CTA works, and it's very broad, encapsulates those organizations. And so what's going to be coming on January 1st is some very harsh realities for a lot of projects that the CTA has been, in my opinion, slept on how much it's going to impact the federal risk for a lot of the projects, even the ones who use the DAO supplement from Wyoming.
Mr. Co-Chair?
Thanks, Mr. Chairman. That's helpful. And going back to my previous question, I'm sorry, I don't think I let you finish. Are there any other, well, to sum up, Texas and California have looked at this. They have not concluded their legislation or passed it. I don't believe, to my knowledge, there are any other states that have enacted DUNA or are working on it right now. Is that accurate?
There are others that are working on it, but none that have been.
Mr. Kerr, go for it, please.
Oh, I apologize. I keep jumping the gun on that. There are others that are considering it. Just as a quick aside, my involvement, I run an advisory firm and I work closely with a lot of VCs, but I also work closely with a lot of projects that do this. This is outside of that. This is almost more of a hobby. It's something that it's not paid for. And so the series of papers that was written, having the opportunity to be helpful and of service to the individuals in the legislatures who are interested in passing this kind of legislation, I'm very interested in helping. After California, Texas, the time spent on Wyoming, I'm certainly interested in some of the states who do not have an existing UNA or interested in passing one. But my capacity to keep taking on these types of projects is about maximized. So I can't necessarily speak to the projects that don't pertain to me directly. But yes, there are definitely, the blockchain associations reach out a lot of times on behalf of putting forward legislation. And so a lot of the various blockchain associations that exist have reached out over passing similar laws themselves.
Great. And Mr. Chairman, quick additional follow-up. Any countries that have enacted legislation that you know of?
Sure. Got it. Yes. The Arab Emirates from Abu Dhabi just passed one. The Marshall Islands has legislation. The Bahamas has legislation. Obviously, Switzerland has a significant amount that's applicable. Caymans. I think what's important, and this is really important from more of a federal perspective than a Wyoming perspective, but as Americans, I think we all care about this. The ability for an American organization to form overseas and then evade taxes or regulatory responsibilities is pretty limited. And right now we have a lot of funding coming from the US, a lot of development in the US. So that ties us to a physical nexus to the US. And from a US standpoint of how we generate value from being part of the technological growth, that's really good. In order for those jurisdictions to be effective, we need to not, from a US perspective, we would need less US involvement. And that's what's incentivizing. So our number of builders in this space, our number of individuals and funds that are based out of the US are very quickly, and right now we lose about 5% every year of people working in this space compared to the growth in other countries. But the reality is, as that venture dollar, as that commitment to funding these projects becomes more and more about making sure it doesn't have any US regulatory presence, from a overall how does it work perspective, those foreign destinations will work very well. They still won't work for US projects. So by not having an alternative to foreign projects, we are basically incentivizing the spend and the planning around how we make sure we don't trigger any of the US markers to have to comply with the US. And so we're really hurting ourselves. So the more those foreign entities are successful, the less successful America is.
Yeah, that's helpful. Thank you.
So, Mr. Kern, I know you touched on this already with one of your response to Chris's comments. Maybe we could just really hammer home or reiterate. I can certainly see one of the questions we'll get as well. We already have the DAO supplement. They already have liability protection. In this most succinct way possible, what would be your, why should I support this? What would be your response to that kind of question?
That this is the infrastructure that supports the best version of this technology. That would be the most succinct answer. And by infrastructure, I mean, I sat through the committee all day, and I loved hearing some of the advancements of ideas around registered assets, the stablecoin. There's a lot of cutting edge topics that were discussed today. This is, and I would love to say this was equally innovative. This is a pure blocking and tackling exercise. This started with a meticulous research to compare conformity amongst the UNA jurisdictions, with Wyoming is one. It expanded to the revised Unincorporated Nonprofit Association Act. And then it took in feedback we'd received from Texas and California. And then we layered in existing Wyoming law wherever possible. And so the whole length and the breadth of this that comes down to is this supplies the answers to any question, not just a DAO would have, but any further generation of technology where decentralization and the utilization of technology provides some gap between how laws work. The areas of the UNA that we took and changed, those were done with intention. We changed venue. We changed territorial application and governing law. We did so in a way to close windows that exist when we start operating more and more on the internet and have less physical nexus to help make decisions. And the registered agent point came up. The one point I would really like to clarify in registered agent is we did not feel it was appropriate to take liberties with existing law. So wherever existing law existed, we followed it exactly. What I would recommend is a change in the UNA as well. The UNA is not functioning on registered agent. It's the one area we know the UNA is not functioning in Wyoming. If we were to follow that language as written, we would not be functioning either with the DUNA if it were to pass. And there's a need to make that not an optional registration, but a mandatory registration. And the reason why it's not easily done is UNAs and DUNAs do not file a registration with the Secretary of State. That's the path to not having to conform with the CTA, which is great. But there's also a legislative component about this that's difficult in statutory construction. A lot of the statutes that are, general, there's a general provision on registered agent. It has 3/5 of those provisions deal with the Secretary of State's obligations, and 2/5 of them deal with the requirements on who can be a registered agent and the rules they have to follow. The UNA took the Uniform Act, and in 1993 in Wyoming passed it. They were the first state to pass an UNA. They were, well, not an UNA, but the Uniform Act. They were the first. And they took the language from the Uniform Act, and that set up a perpetual discordance with Wyoming law. And the Dow supplement was able to simply reference the general provision and incorporate those requirements. Well, that's because it registers. And so we would need to add language that fixes how a non-registering entity would conform to registered agents. And I think that would improve the DUNA on registered agent, and it would improve the existing Wyoming law on UNA. So I think that's a really important amendment or correction or change to this existing provision.
Committee members, any further questions for Mr. Kerr? Seeing none, let's go ahead. Keep you guys close by. Let's open it up to, we still have to follow protocol, of course. Are there any state agencies that want to? Secretary of State's office, Mr. Crossman, please.
Mr. Chairman, Mr. Co-Chairman, just to reiterate the comments we made at the last meeting, we believe that because we have the standard unincorporated nonprofit in there, that while the changes that might be necessary to do this are going to be relatively modest, for instance, adding a category code, that the cost to implement this on the technical side in our current system and the new system will be between $1,800 and $3,100. But we have no really other further comments about it.
Members, any questions for the Secretary of State's office? Seeing none, thank you very much, Mr. Crossman. Again, please just bring by in case we need to call you back up. Public comment. Anybody in the room? Please.
Thank you, Chairman. My name is Xiaomeng Zhou, one of the organizer of American Crypto Fed DAO. So this nonprofit DAO, even it is based on 501c3 nonprofit, but for government votings, that still need to issue token for governance. So for voting through smart contract. So whenever a token is issued, you have a problem about whether that token is securities or not securities. So there's no clarity about that, even in the Wyoming DAO law, in Wyoming law. So we need that clarity. Fortunately, recently, in a ruling repo and SEC that the judge, New York District, Federal District Judge issue an order. So create a very clear scenario what is not security. So for that purpose, for all DAOs, including nonprofit DAO, for all DAOs, so we want petition this committee to consider adding the one sentence, basically it repeat that ruling of that federal district judge of Southern New York. So I sent this one written public comment to this committee probably 2 or 3 weeks ago. There is a one sentence we hope this committee to consider. So, Mr. Chairman, can I ask Scott to read that sentence, that one sentence?
Mr. Joe, this is the handout that, this one. Please go ahead.
Thank you. Thank you, Mr. Chairman. Scott Moeller, American Crypto Fed DAO. And that if recipients of a DAO's token distribution do not pay money or tangible and definable consideration to the DAO, the said token distribution will not constitute the offer and sale of securities. And furthermore, I think that would apply both to the DAO LLC as well as this DUNA that you're contemplating today. The issue goes way beyond American Crypto Fed. The issue is, can a DAO become truly decentralized? Because you have to become decentralized, you need to be able to disseminate your control. You have to be able to relinquish that control, which for a DAO is in the form of governance tokens, as the last speaker so well put. So that's the outstanding issue.
Sarah Ellis.
Thank you, Mr. Chairman. Where in the bill would you suggest this be inserted?
Joe?
So we could not find any token or term in this bill, but if you look at page 26, number 2. So let me read number 2. Yeah.
Mr.
Scott,
Chairman?
Mr. Chairman, can
Just 1 second so I can find it.
Just hang on for just 1 sec, please. Mr. Muller, please proceed. Or,
yep.
Mr. Joe.
So this is page 26B 2I. Adopt voting procedures, which may include smart contracts deployed to distributed ledger technology that provide for the following. And then it's proposals from members or administrators, and so on.
Mr. Joe.
Thank you, Mr. Chairman. So voting need governance token, and the smart contract need a token to operate. So whenever distribution tokens, then SEC, the Security and Exchange Committee, will come in, will say, hey, this could be a violation of security law. And the Wyoming law also have the security issues. We did have a conversation with the Secretary of State office, and they disagree with the New York judge's ruling. So I hope this committee and the Secretary of State office can reconcile their opinion, given there is a federal district judge ruling. That's a great case. So based on that case, I think if this committee can make a Wyoming DAO law have clarity about what is not security, the DAO LLC, non-DAO, non-profit DAO will take off. I think we'll have a lot of people will come in. So today, that's a problem no one can solve. I hope Wyoming can solve that problem. Thank you, Mr. Chairman.
Senator Ellis, any follow-up? Mr. Co-Chairman? Oh, sorry, Mr. Miller.
Thank you. Yeah, just to kind of put a cherry on that, we really do need a bright line definition of what makes a token a security versus what does not make a token a security. And the New York City judge stated that the distributions that were made to contributors, that were made to employees, were not considered as securities, they were compensation. So, and that compensation was not a security. We did have the discussion in the Secretary of State's office, I believe that was September 14th, and there was a disagreement on that. After that discussion, there was Judge Annalisa Torres had a second decision in which she rejected the appeal of the SEC and confirmed that those distributions were not distributions of securities. And I firmly believe that that issue is going to impact every DAO that's here in Wyoming, because unless you have clarity, you cannot disseminate your tokens.
Mr. Co-Chairman.
Thank you, Mr. Chairman. Mr. Chairman, the concern I have is that I don't know that the SEC will even feel compelled to read our statutes when it comes to describing what is and isn't a security. And if we were to put that in statute, I'm not sure that it would help. It could. And I don't disagree with it, to be clear. I think you all know that. I'm kind of sick of the SEC making bad decisions about what is and isn't a security. I've said that about 1 million times. The challenge is with this act, I'd almost not want to make, or I guess I wouldn't want to make an entity think that because we put this in statute, we gave this bright line clarity, that they would say, oh, we're covered, everything's fine. We're complying with Wyoming statute. And they would be complying with Wyoming statute. And we would say that from Wyoming's perspective, you're not a security. And then when they get some friendly letters from the SEC, they'll be shocked and surprised that the SEC didn't take the time to read our statute. And that's really my concern. The SEC, we know, couldn't care less what we put in statute at this point, pointedly so, and that's true of every other state in the union. It's not specific to Wyoming, although maybe they have special love for us, I don't know. But at the end of the day, I would be worried to provide bright line clarity when we don't have the authority to provide bright line clarity, because in my view, Mr. Chairman, I think it might do more harm than good. We can send an angry letter that we think that they should follow this. And, there's no downside to that. But at the end of the day, I'm worried about misleading our constituents into believing that they would be covered.
Yeah, Mr. Co-Chairman, I think that makes a lot of sense. I mean, ultimately, conceptually, I agree, but planting a flag in the ground, defining what a security is in this context, my understanding is that's the fight that we have been trying to avoid, despite the many other fights that we're in, I think, and for good reason. And so that's my hesitation, is that that we're picking that one fight that we've largely been trying to avoid. I think, Mr. Pope, go ahead.
Thank you, Mr. Chairman. I believe we addressed certain classifications of tokens back in 2020. And I think it may be more appropriate if we wanted to carve out under Wyoming law a securities exemption. It may be best to look at it as an amendment to that legislation, but I think you're right. It would be a Wyoming exemption to avoid conflict with our laws, securities laws here.
Yeah, thank you.
Mr. Miller, please go ahead.
Thank you, Mr. Chairman. To be clear, and I apologize if I didn't make it clear at the first, I'm only talking about intra-state, so I'm not only within Wyoming. I'm not looking for the definition to be across the United States, but solely for a Wyoming issuance.
Committee members, any further questions for Mr. Miller? Or do you have any further testimony, please? Mr. Joe?
Thank you, Mr. Chairman. So if this committee, legislature, make it clear what is not security, you already know we can bring merchant here. There are a lot of big merchant in Frontier Mall. Okay, you can see Choi is the chair of the MAC. They are member. Those merchants are member of MAC. The founder of MAC is here, so we can do pilots here. Okay, there are a lot of big merchants here, so we cannot do anything so far. After we registered as a first DAO, after 2 years passed, we just struggled for regulatory compliance. So that's very difficult. So if we are very difficult, a lot of DAO will have the same problem. Thank you, Mr. Chairman.
Mr. Co-Chair, Mr. Kaufman? Is this something I know you've had a lot of experience with our utility token statutes. We worked together back, was that 2019, 2020? When those were enacted? Was it 2018? Yeah.
Yeah, Mr. Chairman, I don't know that I can add a lot to what's been said. I mean, this is one of the major pinch points in the crypto industry in the US right now, just is. So, I mean, Mr. Pope is right. We took some lengths to define what a utility token is as a consumptive token, and that's really only applicable from the Wyoming standpoint and intrastate offerings, which is useful, but it's limited, frankly. Everything else falls under, I mean, everyone in the crypto industry is sick of hearing about the Howey test, right? And what the Howey test defines is something called an investment contract, and what constitutes an investment contract is a fact and circumstances test. And we have loads of case law that interprets what an investment contract is. The SEC seems to be under the impression or the opinion that virtually every crypto that they see is some form of an investment contract. And so that really is the problem that a lot of issuers are in the place of now, is if they're going to issue a token, they either have to be prepared to defend themselves to the SEC when they come calling, or if they come calling, as to ways that it's not a security, or they have to find some exemption, or just acknowledge that they're a security. The problem that I'm really sympathetic to what these gentlemen are bringing up is, what if you don't think you're a security and you're not a security, you're not trying to be a security? How do you issue that token so that people can interact? And there's just not a great answer right now. So, I mean, and I had this conversation with these gents before this segment of the hearing. I mean, I believe me, I get it. It is a huge problem. And if we could create that clarity, I think it would be incredibly useful. Whether or not that's, to me, should reside within this DUNA Act, I'm not convinced that that's the right place for it necessarily, as opposed to maybe going back and revisiting our utility token exemption or something like that to make it have more broad applicability to, any type of DAO that's trying to issue a governance token. But I'm incredibly sympathetic to what they're saying. I mean, they're right. It's an incredibly frustrating aspect of the US regulatory system right now.
Mr. Co-Chairman.
Thank you, Mr. Chairman. A quick question for Mr. Kaufman is, how much authority do we have over securities if it is 100% intrastate? Do we have full oversight if it's all intrastate? I know that we worked on some legislation about some offerings and some interstate crowdsourcing, but when it comes to defining whether something is or isn't a security, making that decision, are we deferred to if it's all intrastate, or is the SEC still going to come in and say, well, we've got standing regardless?
Yeah, thank you, Mr. Chairman. So in my opinion, there's still a few layers to that, because it depends who it is that's offering. if you're a licensed professional, right? There's certain regulatory requirements there, or broker dealers, et cetera. But then also what the instrument is that you're offering, and then the method of offering can also create implications of securities regulation. So yes, under federal securities private placement exemptions, or I shouldn't say private placement, just federal securities laws exemptions, there is an intrastate exemption, right? If the purchasers and the issuers of a security all reside within one state, you don't have interstate commerce under the Constitution, and so the SEC's jurisdiction isn't invoked. So yes, and that's what we did with the utility token exemption, and the theory behind that at the time was, let's create a consumptive utility token that's specifically designed with criteria to not be a security, and we can control what that definition is here in Wyoming. So I don't know if that answers your question.
Mr. Chairman.
Senator Ellis.
I just want to say, I appreciate the problem. I appreciate your suggestion. I appreciate Senator Rothfuss's comments, but I feel like now we're just talking about this suggestion. My personal view is just looking at it and looking at the bill. I don't feel comfortable trying to create or inserting it into the bill at this time. So I just kind of want to be mindful of the time that it's after 5 and we're just talking about this and we need to somehow get back to the bill.
Thank you, Senator Ellis. And I think it does bring up certainly my personal concern. The thing that it's hard for me to get over is that ultimately we're doing this DUNA Act. I mean, if this was an amendment to our utility tokens or another portion of our statutes, I think it might be more appropriate. And I am sympathetic, but I think just given the circumstance at hand, it's tough to add this on to what we're dealing with in terms of DUNA. So is there any further questions? Seeing none, thank you very much for your testimony. Is anybody online?
Mr. Chairman, we have Mr. Maher and Han Verstraete online.
We'll start with Mr. Maher. Brendan, we are pretty pinched for time, but I know you're also passionate about this one.
Thank you, Representative Western and Co-Chair Rothfuss and committee. Brendan Maher, MIT alumnus, and you just went out here, but can you all hear me okay?
We can hear you.
Okay, great.
Proceed.
Yes, so as you're all aware, I worked on the amendments to the initial Dow supplement, on the digital identity working group and the registered digital assets working group, and this working group for the DUNA. A few brief comments. David Keir really went through everything. The act itself is tremendous. What it really sets up is the ability for the United States to have a pegging not only to Wyoming but to the United States as a whole, and that is tremendous. The most important thing I think that needs to be considered, and I'll put this forth for the committee, is the language around the registered agent. I would offer that the committee consider putting in a commercial registered agent, as it will be the case that down the road, especially since this is related to DAOs, that there will be all of the same issues that we've been talking about in terms of cryptographic signatures, and those are not going to go away. Now, we considered looking at adding some language, around that here, and it really has to do with the fact that when things get signed, if they're not signed correctly, they can get lost. To that end, while it doesn't fit into this bill, I do believe that the committee will need to look at a commercial registered agent supplement to solve these issues. And I wanted to make one minor comment regarding the prior discussion, and that would be the way we tried to get around those or mitigate those issues regarding securities is the fact that there are no distributions, and that certainly goes a long way towards solving that problem. Not entirely, but a long way. I'll take questions if you have any.
Thank you, Brendan. Any questions for Mr. Maher? Seeing none, thank you very much. Appreciate it. Closer, who was the other person we have online?
Mr. Chairman, we have Han Verstraete online.
Mr. Verstraete? Thank you for
Hi,
zooming.
hi, everybody.
Mr. Verstraete,
Yeah,
if
I
you wouldn't mind,
appreciate.
please. First, please just
Can you hear me
introduce
all right?
yourself. We can hear you. Just please introduce yourself and who
Sure.
you are here on behalf of.
Sure, I'm Han Verstraete. I've been asked to provide some international perspective. I own a company called Autoco.io, which actually incorporates LLCs in Wyoming on-chain, fully natively on blockchain. So we very much welcomed the openness towards blockchain. And very briefly, in international perspective, David Kerr touched on it earlier, that there's a huge opportunity here for Wyoming to basically provide an anchor to not just American doers and entrepreneurs, but worldwide teams. And so allow me to explain, we see that when we incorporate LLCs in Wyoming, the majority of the owners of the members are actually from outside the United States. And so if that DUNA were to pass in its current form, I think there's a huge opportunity to see decentralized companies or entities or projects have a sort of an anchor in Wyoming for doing stuff also outside the United States, because we incorporate a lot of entities for decentralized projects currently in Switzerland, Cayman Islands, Marshall Islands, and so it would be great to see this brought back to the United States. The key concern we would have is indeed around filing requirements, registration, and so on. And we do support that there would be a registered agent requirement. We just hope that it would be kept as light as possible in terms of the actual logistics of it. And eventually, we do hope that Wyoming may become the first jurisdiction that puts its corporate registry fully on chain, using blockchain as the enabling technology, which it seems like there's still a discussion there happening on budget and what's possible budget-wise.
Thank you, Mr. Verstappen. Committee, any questions? Thank you very much for zooming in. We really appreciate your input.
Thank you. Thank you.
Closer, is any further? Seeing no further public comment, public testimony is closed. Committee, what's your pleasure? Moved by Senator Ellis. Is there a second? Seconded by Representative Singh. So in the interest of time, we're not going to work it page by page, but let's just start at the top and see, are there any amendments? Or any members? Mr. Co-Chairman.
I'm not going to make an amendment at this time, but the registered agent aspect, I understand why it's drafted the way it is, because it's cloning the UNA. But when I look at the UNA statute, I'm not very happy with what they did with registered agents and the fact that there isn't one. We do not have the authority really to go into UNA, and we certainly can't do it in this bill, but I think it might be appropriate for us to, if we pass this bill, and I think passing it in its current form is probably appropriate, to work up an amendment for session that addresses this concern with registered agent, and then honestly forward that on or talk to the Corporations Committee about fixing UNA next year and getting it to conform with us would be what I would probably recommend. But that's not our problem at this point in time. So I don't think we should necessarily try and come up with how to fix that right now. It's a little bit complicated, but I think we should have a fix ready for session.
Mr. Co-Chair, I would agree. I certainly, the registered agent component is a concern of mine as well. Luckily, we have between now and session to come up with, to wordsmith a good amendment. So I think leaving it untouched for now is probably the right course of action, certainly for our time right now. Are there other amendments, committee members? So it doesn't, Mr. Pope, please, go ahead.
Just a question, if you're looking at page 2, line 19, it refers to, well, line 17 through 19, it refers to an organization that has attained exemption under section 501c3, so that's the charitable purpose. And it says, or that upon dissolution shall distribute its assets to a public benefit corporation. My question is whether the or was meant to be an and, or if this really means any legal purpose as long as it's the assets are distributed at the end.
Mr. Kerr, please.
Yes, to answer that specific question, that language was taken exactly from the pertinent section of the Wyoming Nonprofits Corporation Act. And so the "or" is how they have it written. And what I read that to be is the 501c3 election being attained is one means of qualifying. And by submitting through contract that you definitely will send any property upon dissolution to a qualifying public benefit, which would also be a 501c3, that you would meet the test for charitable under the laws of Wyoming.
Mr. Pope, any follow-up?
No, thank you, Mr. Chairman.
Thank you. Thank you, Mr. Kerr.
I do have one quick follow-up. Even though this is a nonprofit bill and it deals with the nonprofit, it does probably not intend most people to use it to attain the 501c3 exemption. That was simply included because there's such a public policy burden on anyone who puts himself out to the public as a charity. And so the reason why we kind of jumped into the nonprofit corp and pulled that language out was to make sure that protection carried through the existing Wyoming laws into this law in matters that pertain to 501c3. But attaining 501c3 or 501c election in general is not a requirement of being a nonprofit. It's the prohibition on distribution of profits that makes it a nonprofit.
Mr. Pope, follow-up? Seeing no further discussion, the bill has been moved and seconded. Clerk, will you please call the roll?
Mr. Chairman, this is a roll call vote for 24 LSO 104, unincorporated nonprofit DAOs. Senator Ellis, Senator Furphy, Senator Nethercott, Representative Andrew,
Aye.
Representative Singh,
Aye.
Representative Yen,
Aye.
Co-Chairman Rothfuss, Chairman Western.
Aye.
Mr. Chairman, we have 7 ayes, 1 excused.
Outstanding. So we obviously a little bit past past time on our agenda. Just a little bit. So that concludes day one. Mr. Co-Chair, is there anything else you wanted to add on to that?
Mr. Chairman, I just don't know if there's anything that
there-
David needs from us for committee directors. I think we're in good shape right now. Yep. And I don't know if anybody else in the committee has any questions.
David knows exactly our intent.
He does, always. All right. See nothing. Thanks, everyone, today.
Excellent. We'll see you back here tomorrow morning at 8:30.